All righty. Jita, Chuck, what's happening? Full stackly. Okay, happy dad. Overbach, Adam, J Miller, Chasing Jack, how you doing? J Rod, what's happening? Gloria, Frank, how are you guys all doing today? Doc's here. Doc's in the house. Yay. Alrighty. Get ready to get started. Let's get it started in here. Let's move this over so we can all see what we're looking at today. Oops, right there, and no, right there. Okay. Good enough. Chasing Jack wants to take a look at APA, which is Apache. Let's take a look at Apache. All right, I think that's fitting, doesn't it? No, it doesn't. It's just a little off. Come on, right there we go. Okay, right there. Nice. That's it. All right, let's take a look at Apache. APA, and let's get ready to get started. All right, first and foremost, who do you have over here? Pressure Blonde and Gretz. What's happening? All right, so good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in weekly cash flow, dividend stocks for weekly cash flow. Lindarella, how are you today? You still own? Hey, Medina's in the house. M3, I'm going to call you M3. I have 3 covered calls at $22.50. All right, Jack, not quite sure what that means. I mean, I'm going to say what it means, but I'm not quite sure what stock you're talking about. Oh, you're talking about Apache. Well, let's take a gander at it. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up. 22.37. Okay, I got it. Let's move this over a little bit. So 22.50 for this week. Not quite. We only got 2 days left, so take a look at next week's 27. Definitely getting you 1% out of this one this week. Uh-oh. Hold on a second. All right, Scotty, I don't do Tesla, so I'm not even going to bother with that one. Seth, FTEL, never heard of it. Rachel, how are you doing? Carp. Hi, Rachel. Rob, thank you for that. I'm having a very lovely day. Thank you. Oh, Pally's my biggest fan. All right, we're going to pause the questions right here for a second. Now, for those of you giving me questions, let's get a few things, couple of rules. Number one, I do answer each and every question. It may take me a while to do it because I have a lot of different platforms here and a lot of different questions coming in from different directions. So please only post your question once. I will get to it by the end of the night. That's number one. Number two, I just like to warn everyone about scammers. There are about 30 people pretending to be me. You might get a text. You might get a phone, not a phone call, a text message or an email or something saying that it's me. It's not. When I tell people, if you want to talk to me, send me your number, I will give you a call. So if you don't actually hear me on the other end of the phone, it is not me. I don't do Telegram. I don't do WhatsApp. Okay, I don't do cryptocurrency. I don't do futures, Forex, quick track, none of that. Dividend stocks only. What you see here is basically what I do, and that's basically it. I come from a group of people called the Gen Xers. which we like things a certain way. Okay? We don't like things to change. If it's working perfectly fine, leave it alone. Okay, if you go back and look at videos of me 10, 15 years ago, you'll be hearing the exact same things you're going to hear tonight. It hasn't changed in the last 15 years. Simple, safe, predictable, consistent, and no way for my 9-year-old. Now, I created this for my 9-year-old daughter. Number 5 was no way for her to lose. Now, it's a little bit different now that you guys are involved. So that's what it was originally intended for. Say, I got 5 rules that came along with trying to figure out how to teach a 9-year-old to invest. Rule number 1 was never buy something you don't understand. And you should understand everything. Okay, what's the 52-week high, the 52-week low? How consistently are they profitable? What are the annual? You don't have to know that the really deep numbers, but it would be good to know the book value. What's it actually worth, other than what do we think it's worth? Huge difference. Rule 2, never sell at a loss. It defeats the purpose. Rule 3, make sure the company is consistently profitable. Okay, me personally, I like 2 decades of consistent profits, which means you get 2 opportunities here to find those. One, you can look at all the quarterly reports, all the annual reports, and find out who is consistently profitable. Or you can go right to the dividends. Now, why do I mean dividends? Because if a dividend is a portion of the company's profit that's paid out to the investors, that is a clue that if the company is profitable, the dividends will be higher than it was the previous year, which means the dividends go higher and higher and higher each year, because if the dividends directly related to the profits, and if that increases, well, more than likely the profits are going to increase also. More than likely, there's creative bookkeeping nowadays, so, be leery of what you're buying, get to know the stock, get to know what it normally does. Goes up, it goes down, that's all they do. The idea behind my theory is you got to get it at the right time. Find a group of stocks you like. Me, it's the companies that are consistently profitable. Okay, dividend kings, dividend aristocrats, dividend champions, dividend contenders, those companies that are consistently profitable year after year after year. So by knowing who they are, well, we look at when do they pay their dividends, because that is a clue, because when they pay their dividends, the stock has a tendency to go up in value. So by knowing ahead of time the stock is going to go up in value, well, now I have something to give me a little bit of an edge of what's going on, because stocks only move for 2 reasons, and 2 reasons only. Reason number 1 is what is called an unknown reason. That's something out of the blue, nobody saw it coming. We all go, whoa, what was that? Yeah, stocks make a big jump up or a big jump down because of lawsuit that comes out of nowhere, a natural disaster, flood, storm, hurricane, earthquake, wildfires, something you cannot plan for. Okay, nobody knew Exxon Valdez was going to crash into the Northwest. Nobody knew that Apple was going to get sued and have that lawsuit. And 3M, same thing. Big problem last year. Stock went crazy. Okay, that's called an unknown event. Now, what is a known event? Something that you can plan for. Something that is right around the corner. You can actually set your clock by, so to speak. Well, we have earnings reports. They come out every 90 days. We have quarterly, annual reports once a year. We have an idea of what's in them. Dividends. It happens every 90 days. We know it's coming. And yes, stocks react a certain way to dividends. Also, seasonality. Well, what's seasonality? It's the change of the seasons, winter, spring, summer, fall. A company runs differently in the spring as it does in the fall. And it directly reacts to the stock price. So if a company goes up consistently in the winter and goes down in the fall, well, we know we can plan for that. That's called a planned event. So I like to use the dividends because every 90 days a company is paying a dividend. That being known, I can now make a trade on that stock if all the things are in order. And we're going to go over those a little bit. We're actually going to do a couple of sample trades. This way you can see it in practice. And you can say, oh, that makes sense, or oh, that does not make any sense. It either makes sense or it doesn't. You either get it or you don't. But understand, going into the whole thing, this was created for a 9-year-old little girl, and I'm going to show you a video of her in about 2 seconds. Sorry, I'm not used to talking so much, so the herbal tea with honey helps for my throat. Anyway, let's go. Take a look at the princess, and you'll see exactly who this was created for. You get a better idea of what I was working with. Okay, go over to my YouTube channel. That's all my social media stuff. Okay, we want to go to videos, and we want to go to the oldest videos, and here she is right here.
Hi, I'm Tracy, and me, as you being part of my internet website called Thingy, which my dad didn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money. List number 1 is...
That's me 15 years ago.
21 days in the month of March. What does that mean? That means every single day you buy different stocks. Every single day there's a different company paying out dividends. Yay! Hey, look, seriously. By picking just one company per month. Just one.
It makes me laugh every time I see that. And I say that every time I see that. I just find it funny. Only because, how do you keep a 9-year-old entertained? Had to make it fun. Had to make it exciting. Okay, so we did have fun doing it, so for the most part. That being said, it was created for a 9-year-old. Back in 2008, she said, Dad, what are you doing? Can you teach me? All right, so it had to be simple, safe, predictable, consistent, no way for her to lose. Now, a few things have changed over the years. One being no way for her to lose. I can't say that to you guys because I have no control over what you guys do. I had a little bit of control over what my daughter did because for her, if it wasn't on the list, okay, if it wasn't on the list, it was an automatic no. That's it. There was no, well, what about this? What about that? The nice thing about her being 9 and not knowing anything, it was, these are the stocks we're looking at this week. This is it. We're not looking at those. 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 And we're definitely not listening to the talking heads on Nightline News. Okay, we're looking at these, and that is it. On this list, basically, we're done. Let's spend this money. Let's invest, and let's make a little bit and upset the apple cart and see what we can do. Simple, safe, predictable, consistent, 1% per week. That's what I was looking for. And if you achieve that, that's over 50% per year. So what's the give and take? Well, you got to give up 10 or 15 minutes of your day. Terribly sorry, that's an hour a week. If you can get an hour a week to make 1% of whatever you have. Now, I understand if you're just starting out, 1% of 10,000, it's only $100. That's not really worth it. Or is it? Because that 1% compounds the next week, which compounds the next week. And if we do it every single week at some point, that little 1% that's coming in every week will be enough to pay all your bills at some point. But how long is that going to take you? Okay, so I tell people, just starting out, paper trade for a while. Use some monopoly money. Don't use the real stuff. Understand it, get it, implement it, and just do it. It's changing your daily routine. So your daily routine, get up, brush your teeth, get dressed, go, do your morning thing. And before you go to work, before you leave, log into your trading account, your investment account. See what's happening with your money. Think of it as a garden. We're going to go tend to the garden for a little bit. Okay, if you don't take care of your garden, weeds will take over. Same thing with your money. If you give it to someone else or you don't take care of it, it's not going to do what you want it to do. Now here, it's simple. 1% is all I'm looking for. So let's go on, and we are looking at Apache. So let's take a look at Apache, see what that looks like, and we'll just continue forward, and we'll show some examples so that way you guys understand what it is I'm doing. Now, there's only a few things in the stock market that are simple and that are safe. Well, one strategy is just buying the stock. That's the simplest one. Hey, I want to buy some Microsoft. Okay, that's the simplest. But there's no predictability to it. There's no consistency and profit in it. And there's no way to know what you're going to make from it. What's your plan? Just buy it and then do what? Okay, so you got to come up with a plan. My plan is the covered call. You buy a stock, you sell somebody the rights to buy it from you immediately. If I buy it now, I sell someone the rights to buy it from me for the exact same price I just paid for it. I pick up what's called the premium. The premium, if it's over 1%, there's my 1% every single week. Do I really care about the dividend? Yes and no. Do I want to collect the dividend? Not really. But I want to buy the stock before the dividend date because then I know the stock has a tendency to go up in value. And if it goes up in value just before the EX date, well, pick a strategy that is simple, safe, predictable, and consistent. The only one I can think of that is simple would be the covered call on a weekly optionable stock. This way I can do it every single week, after week, after week. Okay? Simple. All right. Apache, 22.37 at the moment. We're looking at the 22.50s. This week is going 17 to 25. You can't really expect a lot this week because we only have 2 days left, Thursday and Friday. That's it. We've lost 3 days already. Okay, Monday, Tuesday, Wednesday. So you lost 60% of the possible value. But if we did this on a Monday, you get 5 days of value. If you buy it tomorrow, you get 2 days of value for this week. So we don't look at the numbers for this week, 14 February. We skip over and go to next week, 21 February. So we do it every single week. That's called a weekly optionable stock. You buy the stock, you sell somebody the rights every single week until you hit your target. Well, what's my target? Well, if I'm buying it at 22.37, my target would be 22.50 because that's the closest strike price. Or I could do the 22s, and it's already in the money. It's a safer trade. Lower percentage return, but safer. So stocks move in 3 different directions. Actually, they only move in 2 directions, but you're going to call it a third because if it doesn't move, that means it didn't move. It goes up, it goes down, or it goes nowhere. So that's 3 possible directions. So if you could do a trading strategy, okay? Now, a strategy is more like A plus B equals C. Okay, when you're buying a stock, just A, buy a stock. Well, what next? All right, so a covered call, you buy a stock, A, you sell a covered call against it, B, and that's going to equal what happens on Friday. Do you get all your money back? Is it in the money? Is it out of the money? If the stock goes up, you make money. Stock stay the same, you make money, and the stock can even come down a little bit and you still make money. That is the kind of trades that I want. That's what I was showing for my 9-year-old. All right, that being said, let's do one. Okay, currently, here's the high, here's the low, here's where it was, here's where it is. Look at the action. Up, down, up, down, up, down. Let's take a good look here. This is the 1-year chart. That's the very first one I always want to see. It gives me an idea of what's going on with the stock for this year. Then from there, you can do whatever you want. But for me, I like to go from the 1 year to the 90-day. Now, the reason why I want to do 90 days is to get an idea of what we, the investors, or I should say we, the other investors, are thinking. Okay? Here's where we were 3 months ago, 90 days ago, 3 months ago. Okay, she went up, she went down, big jump up, big drop down, and back up again. What does that mean? Doesn't really mean anything, but this is the motion. This is the motion of the ocean. See that? I think of it as a river. See, look at turn up, turn up. You don't know what's around the next corner because we don't. We don't know what's coming next. But by seeing this, we have an idea of where it should be going based on the current movement. Okay? Up, down, up, down, up, down, up, down, up, down. Okay, so it's coming down today. What does all that mean? How do you interpret it? Well, we know where the high is. We know where the low is. So now squeeze into the last 30 days. Now, I like looking at the last 30 days because it gives me an idea of where it hypothetically should be going next. Because if I'm buying on a Monday and I want to be out of it by a Friday, because I'm retired, I got nothing else to do to occupy my time. Now, some of you guys out there working, I used to do this while I worked. I do all my trades in first thing in the morning before I went to work. At night, I'd come home and I'd check and see what happened for the day. It's basically a set it, forget it type scenario. But you got to come up with the 5 rules. And I don't think I went through all of them. Okay? Rule number 1, never buy something you don't understand. Well, we can add to that. If you don't want to hold on to a stock for a long period of time, don't buy it in the first place. Because stocks go up and then they go down. Wherever you jump in, you have no clue of where it's going next. You just have an idea that makes you feel comfortable. This right here, let me explain to you what I think looks comfortable, looks logical. Looks logical doesn't mean it's factual, it just means it looks logical. So 30 days ago, we're at 24.50. Okay, we jump up to the high of the 30-day period. It looks like 25.70. Okay, then she drops down and finds the bottom last Tuesday. Okay, so from the 30-day bottom last Tuesday, well, logically, it looks like it's going back up again. Because no matter what anybody tells you, stocks only go 2 different directions. They go up or they go down. That's basically it. Up or down. You could say nowhere, which means sideways, which means it's just not going to move. See, like right here, just kind of went sideways for a couple of days. You could say that, up, down, sideways. Okay, so anyway, so it looks, if it's coming down, bouncing off of this bottom here, and then going back up again. That's what it looks like. Is that what is that what is going to happen? No, we don't know what's going to happen, but logic tells us that's what should happen. All right, anyway. Let's keep on doing this. Spider. Hey, Rachel. Okay, Hatem wants me to look at SPY. You don't really want me to. Hey, James, can we take a look at ALSN? Darren Durr in Ireland. Okay, Durr, how are you today? Do I trade SPY? No, I do not. And there's a reason why I don't trade SPY. And just for the fun of it, we're going to do that next. I'm going to show you why I don't like SPY. Now, don't get me wrong. SPY may be perfect for a bunch of people. There's a whole bunch of people out there it might be perfect for. But not me. I'm going to show you in a little bit, and then you'll understand, okay? So let's finish up with Apache first. Now, we're currently at 22.37. Okay, so hypothetically, it looks like it should be going up. But what happened today? That gives me a one or the other. Is this an anomaly? Is it continuing to go up and this is just a little bit of a pullback? It could be. Okay, that's what happened last week. A little bit of a pullback, but then she jumped up and then she gapped up yesterday, went up a little bit more. Today a little bit of pullback, don't know. On its way up, don't know. We'll find out tomorrow. All right, so we look over to this side. Here it is, 22.50 right there. So let's actually do one, see what it looks like. Robbie Blake, the stock goes up, and when it hits peak, very, very top, then it drops. That's what I will look like. Then the percentage will drop, then go up, and when it does, that's when you time is the way to do it. Okay, I agree with you there. Jeff, if the stock is lower on Friday, will you run it back next week or just hold on to the stock? I'm not quite sure what you mean by run it back next week. What I will end up doing, if I buy stock, like hypothetically speaking, well, not hypothetically, I actually own Harley Davidson at 35. Let's pull up Harley Davidson so I can just give you a quick analogy. All right. This is Harley Davidson. High, here's the low. That's where it was. That's where it is. Going up, down. Okay, it's going down now. I'm into it at 35, which is right here. The stock price is down here, but I'm into it at 35 right here. So let me explain what I would do with it, or what I do with it. All right, so we got the high. A year ago, we're at 37, 47. We topped off at the end of March at 44. Last 90 days, same thing. High, low, where was it? Where is it? What's the direction? Sideways down. Okay. The low was just a couple of days ago. Now we got a couple of days to the upside. Could this be the bottom? Yeah, it could be. But I already own it, so I don't want to buy any more. All right. But I'm in at 35, which is way up here. The current price is way down here. So how do I make money off of this? Because it's been dropping ever since I bought it. So I think I bought it back in December. Or, no, wait a minute. November. Because I bought it at 35, so it's like way over here somewhere. In November, most likely. But look at that. I've had it while it did that. But I still own it, and I still get a premium on it every single week. So if it's currently at 26 down here, I'm not going to look at those numbers because those aren't accurate. It's only 2 days left. Here we go. Now you can't even see these damn numbers because those aren't right either. Anyway, as the stock is dropping, okay, I'm at 35, which are basically worthless. So I'm looking at the 27s or the 28s. Okay, I sold the 28s this week. And I got, I think it was like 0.25%. Now, 0.25% kind of sucks, but it is 12% a year. But when I first got Harley Davidson, I was getting 3% per week. Now, I did that for about a month. So 3. Then she dropped down to 2, then dropped down to 1. Now it's down to 0.5% per week. Okay, so 0.5% or 0.25% per week. Not the greatest in the world, but I have no intention on selling it at a loss. And yeah, I have some coming in every single week on it until it goes back up to 35. And I can get out because I'm trying this year to have 0 losses. But I still want my 1% every week. So how do I do it? Well, I sell it as it's going down. All right, let's keep on progressing forward. Hopefully that answered your question. Now, Hatem wants to take a look at spiders. And then he wants to know why I don't like SPY. SPY. Well, couple of reasons. Number one, it's at the high of the year. I don't buy anything at the high of the year. It just makes no sense to me. I buy because you can make most of your money buying low and selling high. All right, Jeff, you got that? Cool beans. All right. So, here's one reason I don't like spiders. It's at $600. I try to stay away from stocks that pricey because if I can get 1 or 2% every single week on a $20 stock, why would I want to put all my money into a $600 stock? Let's keep on moving on. Now, nothing you're going to see on here is going to tell you why I don't like the spiders. We actually have to go to a financial website, which is called Yahoo Finance. So let's go over to Yahoo Finance and put in the spiders. SPY. So this will give you a good idea of how to use some of the financial information that's free to that's available online for free. All right, so here we are, Yahoo Finance, SPDR, Spiders, S&P 500 ETF Trust, SPY. Okay, $603. Look over here. Summary, news, chart, community, historical data. I want to see how wonderful this thing actually pays out on a quarterly basis, because a dividend is usually paid every 90 days. So let's actually take a look. Okay, so once we get over to here, this is the the historical data, or the data stream. You got the date, far left corner, column. The next column is the opening price of the day. This column is the high price of the day, the low price of the day, the close, the adjusted close, and then the volume. Gives you all the information. Every single day's open. It gives you all the information. What I want to see is right under here, historical prices. Now I want to see dividends only. Now, when I say consistency in profitability, that means the dividend should increase every single quarter or every single year. Okay, so let's go back just 20 years, which would be 2005, right? 2005. All right, here we go. 2005, right there, 47. Okay, now I'm going to read the numbers. And hypothetically speaking, it should get higher and higher and higher and higher and higher, correct? All right, well, let's check it out. Hello, just trying to learn. Barry Banks, Cool Beans. What are you teaching? I'm teaching investing for dividend stocks for a 1% weekly return. It's simple. Just don't invest when you're at the peak. Okay, it's really just the momentum. Momentum plays a big part. Yes and no. Okay, I'm saying yes and no. We're going to touch on that in a little bit, because I've been doing this for a long period of time. Stocks go up, people take profits, stocks go down. Gets down to a value point where investors say, hey, this is a good deal now. They start buying, stock goes back up. Profit taking, accumulation, profit taking, accumulate, whatever you want to call it. Up, down, it's all the same. Okay? Potato, still the same fruit. All right, so let's take a look at the numbers. Are you ready? So hypothetically speaking, if this is consistently profitable, the number should get higher and higher and higher and higher, correct? Well, let's check it out. 2005, 47, 49, 52, 67. Well, that is, each one went higher and higher and higher. Now 67, 52. Hold a second. It just went backwards. Okay, it went backwards by 15 cents. 15 cents on a 67. Okay, that is a 20% drop. That's a 20% drop from 2005 to 2006. 20% drop. That's not consistent profitability. But hold on, it gets worse. It does. So it goes to 52, 67, 52, backwards, 56, 58, 79, 55, backwards. What is that, 22 cents? Yeah, that's a big drop. 66, 72, 78, 64, backwards again. 67, 69, 72, 56, backwards again. 52, backwards. 51, backwards. 49, 40, 59, 48, backwards. Yeah, up, down, up, down, up, down. No, 2 steps forward, 1 step back. No, that's not consistently profitable. But hold on. It gets worse. It does. Hold on. Now we're going to go take a look at the summary. The summary is going to give us some interesting financial data. So when do you invest? At the peak or before the peak or after? You could just add it up, find the meaning, percentage. Violence fiend. Oh, violence fiend. Oh boy, interesting name. Okay, we're going to go take a look at the summary. Now, the summary is going to give us some financial data, some financial information. See if it makes sense. Okay, here it is right here. Spider 500 ETF, SPY, $603 per share. The number I want you to pay attention to is this one right here. Do you see it? The yield. The yield basically the yield is when you put X amount of dollars in, $604. What is the return that you're going to get when you collect all 4 of those dividends? Because the dividends are paid 4 times a year, every 90 days, every quarter. First quarter, second quarter, third quarter, fourth quarter, so on and so forth. That's your percentage of the profits from SPY. Did you see the number? 1.17%. That's not a day, that's not a week, that's not a month, that's not a quarter. That is 1.17% for the year. So now, again, tell me why you think SPY is a good investment. If you're making 1.17% a year return buying this, explain to me why you think that's a good idea. Now, I'm going to show you how I get... Now, I'm not just going to tell you, I'm actually going to show you, because after this, you're not going to need me for anything. Moral support, maybe? I'm going to show you everything you need to know. I'm not going to do it for you, but I'm going to show it to you. Okay, and I'm not going to try to sell you anything either. You got people in the background saying, yeah, what's he trying to sell? I do got shit for sale. I do, just like anybody else here. I've written 14 books. I got a course, all that kind of crap. But I'm not trying to sell anyone anything. Okay? Let's keep on going forward. I don't like SPY. I don't like the numbers. There are other companies that are consistently profitable. Let me show you one kind of quick. No, not that. I want to go to historical data. And I'm going to show you what I mean by consistent profitability. Because sometimes I think people don't understand because miscommunication. Okay, when I say consistency and profitability, let's check out this one here. And I'll show you specifically what I mean. You're going to go all the way back, as far back as this goes. Let's go back to 2005. 2005, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 51, 56, 62, 68, 75, 83. Every single quarter, it was higher and higher and higher and higher. That is what I mean by consistently profitable. Okay? Consistently profitable. Every time you give this company money, it makes a profit year after year after year. And there are plenty of them just like this. So why would I ever put my money in something that's not consistently profitable? And that one is my biggest challenge, to figure out why the hell are people putting money into something that's not consistently profitable. Okay. What about day trading it? Yeah, no. Okay. Are you taking questions right now? Maybe, Matt. Depends what the question is. Find the ratio that's average for all year. Good point. Screen is backwards. Joe, screen is backwards on every single camera I have but one. Only one camera I have allows me to invert it, to do a mirror image. Okay, so sorry, this one's not it. It's that one over there. Ron Meisner, how are you today? Glad for you to join. Ask questions if you like, if something's not quite understandable. So, find the ratio that's average for all years. Okay, Violent Fiend, I'm going to disagree with you. Okay, I'm not looking for average. I'm looking for consistently profitable. Point blank. There's 9,875 companies I can choose from on any day of the week. Any day. Why am I going to put my money into something that's not consistently profitable? If I can show you a company that's consistently profitable year after year after year after year, why not invest in it? It just makes sense to me. And besides, I'm not giving advice to anyone. I'm just saying what I do. Okay, you guys are coming along for the ride, looking over my shoulder, asking me questions. I'm just answering them. I'm not giving tips. I'm not giving advice. As a matter of fact, I tell everybody, do your own research. Question number one that I want you to walk away from all of this: does it make sense? Never do an investment that does not make sense. If you don't understand it, don't do it. Simple. All right. Mr. Ayub, what's happening? Your right thumb looks funny. My right thumb? Nothing wrong with my right thumb. My left thumb is funny. I was doing some work in my shed, and I was screwing the screw in, and it's like, oh, that feels uncomfortable. Yeah, I screwed right into my thumb. Anyway, that was very uncomfortable. Okay, how do you find the best companies to invest in compared to the really bad ones? Like, what are some keys to look for? Matt, that is the best question of the day. Ding, 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 ding. Matt gets the best question of the day. So, Matt, here's my philosophy. It's just my philosophy. Now, there's 9,875 companies. We check once a week, okay? We check once a week how many companies are available to invest in. 9,875. All right, so how do you find the best ones? Somebody else does it for you. Let me explain. There is somebody, actually there's a group of somebodies that do this. You got one guy here, one guy here, one guy here, all different guys, but they're all doing the exact same thing. They are looking for companies that are consistently profitable year after year after year after year. And the best list is called the Dividend Kings. To be a Dividend King, the requirement is you have to increase your dividend payments every single year for 5 decades. That's 50 years of consistently increasing your profits. Okay, there's only 54 companies that fit that description. However, the next list would be the Dividend Aristocrats. 67 companies that have consistently increased their dividends to their shareholders for a minimum of 25 years. Well, I got a couple questions. You don't pick it just because it's good, but if you get a profit more than what you invest. Okay, now Violent Fiend, I'm going to argue with you on this one just a smidge. You're new here. Sit, chill, relax, watch what I'm doing. Ask yourself, does it make sense? Then you can, critique it. See if it, if there are any holes in it. Steve, AMD, Advanced Micro Devices, is looking good for this next 3 days. Seasonality is volatile, though. Could you review it? Yeah, Steve, we'll take a look at that in a minute. But you might want to do some research on AMD because they've come up with some questionable accounting practices in the news during the fourth quarter of last year. Might want to check on that one. All right, so let me continue with what I'm saying. What the hell was I saying? Oh, yeah. Somebody else takes care of that list. So, easiest way to find them, you go to Google and you search Dividend Kings List 2025. And then Dividend Aristocrats List 2025. Then the champions, then the contenders. And if you want to, as a bonus, let's throw in Warren Buffett's stock list 2025. Between those 5 lists, you should have 300 good, solid companies that are consistently profitable. Now, every once in a while, we'll slide one in that looks good and everything is, just right. But again, I am very picky of what I invest in. It's got to be consistently profitable for me. Plain and simple. Okay, you got that, Matt? Not just the Dividend Kings. You get the Dividend Aristocrats, the Dividend Champions, and the Dividend Contenders. These are companies that if the dividend continues to increase, you cannot increase the dividend unless the profits increase. Because the profits and the dividends are joined together. So a portion of the profits is equal to the dividends that they pay out. So if they're paying out X amount, let's say it's 10% or 5% or 3%, whatever, of the profits go to dividends. If that increases every year, well, the profits have to increase also. It just goes together, hand in hand. All right, so I don't like Spider, SPY. It's not consistently profitable. Plain and simple. In the return, 1.17, yeah, no thank you. Okay, I'm going to show you in a little bit. We're actually going to do some practice trades, and you'll see how the numbers look. And you just ask yourself, does this make sense or does it not make sense? Simple. Understand, thank you for explaining. You're welcome, Matt. So, let's get out of this. And what are we looking at next? FTEL. Seth, I have no idea what FTEL is. FTEL. It's a no. And the reason why it's a no, it has no options. So how do you trade a stock to get weekly, consistent, predictable returns without options? Sorry. And it's 80 cents a share. I have no idea what the hell you're thinking. Because I can almost guarantee with a huge amount of certainty that this thing does not have 20 years of increased dividends. It's just a guess. Break Angel, how are you today? The company could be hacked and drop. All right, Violence Fiend, thank you for that. Liam, brother, what's happening? Anyway, let's keep on. I'm your biggest fan. Thank you, Pally. So what do we have? FTEL? No, that ain't just happening. Okay, James Williams. I'm just roughly. Have you even looked at the numbers for QQQ? Seriously. Okay, TQQQ. Okay, TQQQ. Okay, it's at 85. The 85 is going for 262. Nice. Well, let's see how consistently profitable they are. Okay. TQQQ. Okay, because I'm interested in consistency of cash flow. So ProShares Ultra. All right, wait a second. Hold, what the? 10 years? Wait a second. Hold on. Now, when I say consistently profitable, well, and I want 2 decades of increased dividends, and you're showing me this, number one, it's 2014 is the first dividend. Look what they paid out, 0. And then 2015, 0. Nothing for 16, nothing for 17. 18, they threw up 1. Okay, nothing for 20, nothing for 21. Yeah, no, and double no. Okay, do yourself a favor. Before you invest any money anywhere, do some research. They get a whole bunch of numbers that are missing here. Now, your money, you can do whatever you want with it, but you're here, this is my opinion. My opinion is I wouldn't invest my money into something that's not consistently profitable. And there's a huge amount of missing information there. So look at it this way. TQQQQ. Well, let's cross that one off the list. Now we have 9,874. Okay, 9,874 companies to look at now. This one ain't going to work because it's not consistently profitable and it doesn't have 20 years of profits. Matt Johnson wants to look at JCI. What the heck is JCI, dude? JCI. Johnson Controls. No, again, dude, monthly. Monthlies just don't work. When I say weekly options only, why would you be showing me this? It's monthly. Okay? February, March, April, June, July, September. Those are all months. Those aren't weeks. So months, you can only do it 12 times a year. That's not as good as 52. Now, 52 may sound more work. Well, you get more money. I mean, that's just the way it works. And don't think you're going to get something for nothing. Because, yeah, you do have to put some time and some effort into it. So you basically, when it comes to your money, you got 2 choices. You do it yourself, or you give up accountability and you let somebody else do it. Okay? That's what it comes down to. Terribly sorry. You do it yourself, or you give it to someone else to do for you. There's no other way around it. Okay? There's no safe space. There's no, oh, that triggers me. None of that bullshit. You do it yourself, or you let somebody else do it for you. That's it. All right. So, here we go. Johnson Controls is a no. Battle Axe, weak money here. He's absolutely right. 1% a week is horrible. How you doing? I'm doing fine. How you doing? So Battle Axe, you're right. This is boring. This is weak money. Nothing really good to see there. Team Snagging Whiskers. Hey, James, can you check Bitcoin 4x XRP? Seriously, how about Intel? Seems to be pushing higher than slow. Okay, let's check out Intel. I like Intel. I actually have some Intel. So it kind of makes sense to take a look at some Intel. Now, anytime I look at any stock, I always want to look at the 1-year chart first. You decide what you want to look at first. Me, it's the 1-year chart. I want some kind of idea is where is the high of the year? Right there. Where is the low of the year? Right there. Where was it a year ago? Right there. Where is it now? Right here. And what is the flow? What direction? Sideways, down, sideways, down, sideways. It's currently at 22.48. All right, that is kind of okay. Because I'm not buying to hold for a whole year. I'm buying with the intention of holding it for 5 to 10 days, and that's it. That's my intention. But if I got to hold it longer, I want to make sure it's a good company, and I'm okay with that. So that looks okay enough to go to the numbers. So now let's check out the numbers. Is it going to be financially viable? Is it going to be a yes, or is it going to be a no? All right. So currently 22.48. The 22.50s are going for 81 for next week. Oh, that's a hell yeah. That's almost 4%. How did I come up with that so quick? Well, here you go. Here's a little trick. It's not that difficult. It is so easy, it's kind of silly. Okay? The stock price, $22.79. What's 1% of $22.79? 22. $22.79. $22.79. 1% is 22. You just take the decimal point and move it up 2 places. That's it. Okay, 22 cents is 1% of 22.79. Okay, so how do I get to the 4%? Well, the 22.50s is going to be the closest one. And it's going for 80 cents to 84. Okay, so that's almost 4%. 4% would be 88. But 81 to 84, that's close to 4%. Okay, for 1 week. That's the beauty of it. For 1 week, I can get that nice fat. All right. It may not sound like a lot. Now, to some of you people, if it doesn't sound like a lot to some of you pieces, well, you're in the wrong place. Because I'm looking for cash flow. I'm not looking for capital appreciation. And there is a huge difference between the two. Okay? Some people, most people, almost all people, buy stocks to hold on and then sell at a later date. They want to buy it here and sell it as it goes up. That's capital appreciation. You're definitely in the wrong place. This is not for you. This is slow, boring, monotonous, and I don't really care if the stock just goes sideways and goes nowhere. As long as I can buy it at this price, sell this, collect this, and it's more than 1%. And the company is consistently profitable. Well, Intel is on my list. I do own a bunch of Intel. And yes, Intel does give me over 1% every single week. So I bought Intel at 22, almost at 23. So right now in this area. And so far, I've made 1% every single week. Why the hell would I ever get rid of it? So if I hold on to Intel all year long and get 1% every single week, that's a 50% profit just on this company, if that's what I do, of course. Okay? Anyway, let's do a practice run on this one. This one looks cool. But before we do, let's check out all the numbers to make sure it makes sense. Well, number one, it's Intel. The question you should ask yourself is, do I like Intel? Second question is, do I like Intel at this current price? Okay? Next question is, do I like Intel at this current price enough to buy it and hold on to it until it hits my target? Well, what's my target? Well, if I'm buying it at 22.48, my target is going to be the closest strike price, 22.50, because these are the strike prices right here. 22.50 is the closest one. Okay? And hold up. Here's the high of the year right here. It drops higher, lower, but look at what's happening right here. Now, I want to zoom in a little bit closer to get a better look at that so that you can see, does it make sense or does it not? But keep in mind, the best time to buy a stock is buy it low, sell it high. Okay? Buy low, sell high. Never, ever, ever have I heard buy it high and let's wait for it to go higher. Never heard it. Never, ever has anyone said, hey, I got a great investment for you. Look at Intel. It's at the high of the year. Let's buy it and wait for it to go higher. A place where it's never been before. That makes no sense to me. Anyway, all right, so let's take a look. A year ago, Intel was at 43.80. The high of the year was just a couple of weeks later, the middle of March. That was 46.69. Now, the bottom of the year was in September 1839. So we now know the high of the year and the low of the year. Well, right now we're at 22. Okay, the low of the year is 1850, and we're at 2250. All right, it's not the low of the year, but it is low enough. I mean, look where the high is, way up here. That's like a 50% drop, a little bit more than a 50% drop. Okay. If you're not okay with a 50% drop, then you shouldn't be playing this game, because stocks can fluctuate that much. High of 46, the bottom at 18, that's more than 50% drop. Are you okay with that? If you bought it up here, drop down to here, are you okay? And are you willing to hold on to it? Because right now, if I'm buying it at 22.48, there's a chance of it going down to 11. That's a 50% drop. Am I going to panic? No. Okay, I'm just going to say, hey, it's Intel. I like the company. I will hold on to it, collect a premium every single week until it hits my target. Okay, never buy something you're not willing to hold on to. All right, that being said, there's our low, the last 90 days. Now, the reason why I want to look at the last 90 days, I want to get an idea of the flow. What are other investors thinking? Look at it. Up, there's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down, up. Okay, great. In the 90-day time frame, you got your bottom here, your top here. It should be going up. Should be, because that's what it looks like. You know, down, up, That's what it's doing. And it's going to keep going up until it's done. Do we know when that is? No, we don't. Let's look at the 30-day. All right, here's the last 30 days. Now, the last 30 days is telling me it's not a great time to jump in. For me. Okay, 30 days ago, we're at 19. We shoot up to 22.40. We drop down to 18.75. We shoot back up to 22.48. New 30-day high. 30-day bottom, 30-day high. What usually happens after this, it's going to keep going up until it's done. Plain and simple. When it's done, it'll turn around and come back down again. What usually happens? Usually, your bottom here, 18.75, 19.75, 20.75, 21.75. That's $3.75. $3 and get it off my head. $3.75. Okay, now that does not sound like a lot of money, but 18.75 was the bottom, and this thing jumped up 3.75. Do you know that 3.75 on 18 is over 20%? A 20% from here to here. Ask yourself a question. You buy something and it jumps up 20%? Two things. Number one, it ain't a profit until you take it. Number two, nobody ever went broke taking profits. This baby jumps up 20% and you don't take your profits, that's your own damn fault. Sorry. Point blank, I'm Gen X. I don't apologize if you're a little sensitive. Okay? If your stock jumps up 20% and you don't jump out, that's your own damn fault. What's going to happen? You're going to get guys just like me. 20%? Hell yeah, I'm out of here. We sell and then all of a sudden it just drops. That's what they do. They go up, they go down. They go up, they go down. All right? That being said, let's do one at the 2250. Because if you look at the 90-day chart, okay, here's the 90-day chart. We still got a long way to go. So depending on what you're looking at. If you're looking at the 1-year chart, well, great, perfect. If you're looking at the 90-day chart, even better. The 30-day chart, not so much. But the 30-day chart looks like that. All right, so let's take a look at the seasonality chart. Now that will give us an idea of what does this stock normally do every year. Now, for those of you who don't know what a seasonality chart is, let me briefly explain. Okay, all the way to the left is January 1st. All the way to the right is December 31st. It's the whole year, from the beginning to the end. Okay, the blue line down here represents the stock movement this year. Okay, January's all the way over here. Now we're into the second week of February. Now look what happens usually in the second week of February up here. So, sorry, I didn't explain. The red line represents 10 years of average movement. So let's zoom into here and let's see what this thing does normally this time of year. Okay, here's where we are right here. Okay, the 22nd. Are we in the 22nd? No, we're in the 13th. Sorry, the 13th right here. Usually going to go sideways for about 2-3 weeks, and then going to slowly come down towards the end of March. Usually, not guaranteed, but that's what it's done over the last 10 years. Now, has Intel done anything new, different, and interesting, or do they just do the same thing over and over again? They'll probably just do the same thing over and over again. Okay, let's go back to chart. All right, so let's move this thing back over this way, and let's do a covered call so that you guys can see how it's done. Now, I wrote a book about 15 years ago, Choosing the Right Trading Platform. Now, I've been using Think or Swim for the last 20 years. And the nice thing about Think or Swim, when the guys who put this together, when they finished it, they sold it. So whoever they sold it to doesn't change it. It's just been the exact same for the past 20 years, which is freaking awesome. I hate it when people say, oh, well, let's change it up a little bit. Let's make it better. No, if it ain't broke, leave it the hell alone. Okay, it works fine. Just leave it alone. You got us old folks who don't want to learn something new every 6 months. Terribly sorry. I'm an old dude. I don't want to learn something new every single month or every single 6 months. Okay, I love my Windows 95. It was awesome. It did everything I wanted it to do. Oh, but this is better. No, it ain't better. Not for me anyway. Anyway. All right, so we're going to do a 2250 only because the numbers look good. First thing I want to do is I want to change this right here. From a spread single, I want to change it to a covered call. Now, a covered call is where you buy the stock and you sell the option. It is the simplest, safest trading strategy that I know. It allows you to be predictable and consistent. Okay, remember I say I wanted simple, safe, predictable, and consistent. Trading strategy was created for a 9-year-old little girl. My daughter, in 2008, she wanted to learn how. Okay, great. Simple, safe, predictable, and consistent. Consistent, I can do it every single week. 14 February, that's this Friday. 21 February, that's next Friday. 28 February, that's 2 Fridays away. 7 March, 3 Fridays away. 4 Fridays away, 5 Fridays away. Every single Friday, one of these expires. So I can do this every single week. So if I'm getting 1 to 2% every single week. Anyway, let's keep on moving. So 2250, I want to change covered stock right there. Here's the 2250 right there. I want to buy it right there. Now, I just want to do one contract. I don't want to show you 10. It might freak you out about the numbers for those who are just getting started. And then I want to change it from a limit order to a market order. Let me explain. Right? Now, a market order will fill instantaneously. First thing tomorrow morning, 9:30 a.m., this and this will fill. It's 2 orders in one. Buying the stock, selling the option. They're already tied together. So I already know my profit's going to be. So let's hit confirm and send. Now, this is your opportunity to read what the order is before you hit that button right there. Because once you hit that button right there, it goes right to the market maker and he fills the order. Better make sure you're right, because as soon as you hit that button, you're spending money, or you're investing money, or you're multiplying money, or you're duplicating money, or whatever acronym, whatever metaphor you want to use. All right, so here's the trade. Buy one covered call Intel 100. That identifies it as the weekly. 21 February 25. That is this coming Friday. Not this Friday, the 14th. Next Friday, the 21st. Okay, this order is going to expire next Friday. The $22.50 call strike. Remember, I'm buying it at $22.30. I'm selling it to someone else at $22.50. At the mark, Intel at the market to open. Here's my profit right here for this contract. Remember when I say consistent? Simple, safe, predictable, and consistent. I know exactly what I'm making before I even make the trade. Most people just buy a stock and wait for it to move. Well, I already know what I'm getting before I even do it. And the stock doesn't have to do anything. As a matter of fact, if the stock stays exactly where it is and doesn't move at all, more the better for me. Simple. Okay? All right. First line I'm looking at is my break even. $21.95. What does that mean? Anything over $21.95 come next Friday, I'm going to have a profit. Anything below $21.96, well, then I'm not going to be in a profit. All right? But if the stock is currently at $22.48, my break even is $21.96. So if it goes up, I'm profitable. If it stays the exact same, I'm profitable. The stock can even come down from $22.48 all the way down to $22.96 before I start losing anything. But do I ever lose anything? If I never sell at a loss. Because once you buy the stock, it's yours to do whatever you want. Now, if I sell a covered call stock option against it, well, that's only good until Friday. Then after that, it expires. So if whoever buys it doesn't decide to exercise the following Monday, I can do it again. Okay, and if that person doesn't exercise on that Friday, well, the following Monday, I get to do it again. And then I do it over and over and over again every week. You got to do something to keep yourself entertained when you should retire. This is all I do. Okay, I'm retired. I do this. I do my thing. Oh, I've been working on my aquarium. And yes, we will be showing the aquarium as soon as it's done and filled up, and I'll be actually broadcasting in front of it. But then I'll move back into here so you guys get a good look at it. It's like, okay, that's a fucking aquarium. It is. You can swim in this damn thing. You can swim in it now that it's empty. But once the coral goes in there, you can't swim in it. Because the coral takes up all the space. All right, anyway, let's do some fancy math to figure out what kind of rate of return this trade is going to be. So if I'm making $53.50, next line, maximum profit, $53.50 on one contract. Let's do some math. Clear that. $53.50 is the max profit. Now, to find out your rate of return, you take your profits, $53.50, and you divide it by the maximum, the cost of the trade, including commissions and fees, $2,197. Doesn't sound like much of a profit, but hold on. $2,197. And that gives me a rate of return for 1 week, 2.4. Now, 2.4% every single week is almost 100. Actually, it's over 100%. It means you could double your money in 11 and a half months with 2.4% every week. Okay, remember then, that's just slow, boring, monotonous, the same thing over and over and over and over again. Does it make sense? Is what you need to be asking. Does it make sense? It's either a yes or a no. Okay, so at least keep on going. Rizzo. I have $100,000 to invest. Cool beans. This is week 8. Battle X, you said that once already. Okay. Battle X. Little profit, middle skills, high time wasted, not worth the effort and energy. Battle X. Cool beans. Thank you for that. Irizo. Coca-Cola. Well, let's take a look at Coca-Cola. Oh, Battle X. Being in real estate and use my insurance policies as my bank, my cash flow is endless. Awesome. Gotta love it. Okay, Arizo, you want to take a look at Coca-Cola. So that is, which one is that? Intel. Now, I do own some Intel, and yeah, I do get, 1% every week from Intel. So I have no intention whatsoever to get rid of my Intel. Okay, if it makes my target, great. All right, all that being said, let's move on to the next one. Oh, what is this? How does one join the morning group on Mondays? Leo Hill. Leo, let me tell you, give me a buzz. Or better yet, put your phone number in the email. So you're on YouTube. Okay, in the bio on YouTube, because where it says, you'll find all the contact information. Send me your phone number. I'll give you a call. We'll chat. This is not for everyone. It's slow. It's boring. And it only makes 1% a week. Okay? Now for Battle X, 1% a week or 50% a year is not enough for him. And that's okay. It's not right for everyone. He does real estate. Okay? So Intel. We already looked at that one. Arizo wants to take a look at Coca-Cola. Now, Arizo, I don't think I've ever bought Coca-Cola because the numbers just don't work for me. I may have bought it once or twice in the last 20 years. And here's the reason why. Let's take a look. Here's the high. That was in August. The low in April. Okay, she went down, up, down, up. That is the year chart. So we're taking a look at one whole year. Okay, fine. Do you like Coca-Cola? Well, Coca-Cola's been increasing its dividends for over 5 decades. They're one of the cream of the crop dividend kings. So if you're not buying Coca-Cola, you should be asking yourself, why not? Let's take a look at the numbers. Neuropunk. Mixed game. Cool. It's all about realized gains from the cash flow. Team Swag and Whiskers, thank you. Show me, please, how to get rich for my daughter. David, how are you doing today? Okay. All right, so let's keep on going. A year ago, Coca-Cola was at $59.37. Hold, before we even do that, is this even worth our while? The last trade was $68.71, so we'll be looking at the 69s. I got to change this back to single so I can actually see what the numbers look like. Okay, so this is the reason why I normally don't do Coca-Cola. Regardless what the chart tells me, what are the numbers telling me? If I'm buying it at 69, the 69 is going from 49 cents to 57 cents. Not quite 1%. Okay, it's above 0.5%. It's right around 3/4. So 0.75% every single week is going to give you somewhere around 40% a year. Are you okay with 40% a year? Well, Coca-Cola's your man. It's been around for 140 years. However, I wouldn't buy it this time only because, take a look at this. With a gap up like that and a big movement to the upside today, yeah, more than likely there's going to be profit taking. Sorry, the last 30 days went from 60 to 69. That's a 15%. 15% increase from here to here. Is there going to be profit taking? More than likely, especially with a gap up like that. Sorry, just it doesn't look that right. Oh, Beach Bumbo Reynolds, Crypto Pulse Chain. I really want to get set up to do this, but I never went as far as trading options. Kind of scares me to mess up. Well, Trevor, here's the thing about options. Let's think of it this way, Trevor. Well, let's say hypothetically you got an old MG in the back, MGB, it's a car. Say you have one in the backyard, push it out into the front lawn, you slap a for sale sign on it. Let's say you want $5,000 for it. Okay, great. Tom down the street, the guy in the White House with the blue shutters, he comes down the street and says, hey, I like your car. Here, take this, $100, hold it for me until Friday. If I come back on Friday, I'll give you the $5,000. If I don't come back on Friday, you keep the $100 and then sell the car to someone else on Monday. Same thing. It's yours until whoever buys the option from you. This will give you cash flow. Whoever buys that option from you decides to exercise their option and say, hey, I will take your stocks at that price. Or the car analogy, hey, I will take the car for $5,000. So the option is just selling somebody the rights to be the first person to buy it from you at a certain price, by a certain date. At a certain price, strike price. Certain date, okay. Let's keep on keeping on. All right, you ready? There will always be someone who wants to buy your options. Well, Trevor, yes, but here's the thing. When you buy and when you sell, there are certain key words, key phrases, because there's what is called a market order. There's called a limit order. There's called a stop loss. There's a trailing stop loss. There's a whole bunch of different orders, but just beginning, you should listen to 2 and only 2 until you understand them better. One is a market order, which means give it to me now. I'm willing to take whatever is available. That's market order. It's always simplest, easiest, and quickest. Limit order, you say, this is what I want to pay, and that is it. Okay, it either get filled or it won't. Once you own the stock and you sell a covered call against it, let's say you got Coca-Cola and you want to collect 57 cents, you say, I'm going to sell this at 57 cents, limit order, that's it. But if it goes to 56 and it doesn't quite get to your 57, it doesn't get filled. And then you just have it sitting there doing nothing. So I always use market orders when I'm jumping in, and when I'm selling, I do adjust it. I do keep my eye on it, and every once in a while, I have to drop my order, my fill price down in order for it to get filled. Because I'd rather have it filled at a lower dollar value than not at all. Because some money is better than no money. I like to look at my cow analogy. Cow analogy. Let's say I got a cow. Cow gives me a gallon of milk every single week. Great. Cornflakes every day. Yay! Now, what happens when the cow gives me a half a gallon? Do I get rid of it? No, I just limit how many bowls of cereal I eat. You're not going to get 1% every single week, every single time. Now, there are some times, I'm going to show you this. I do show all my trades. So let's go here. Let's go there. Let's slide all the way down to about here. Let's go down a little further. All right. Each week, there's 52 weeks in a year. Week 28, week 27, week 25, week 24, 23. They're all there. Trust me, 52 weeks. I share 3 accounts. First part of the year was only 2, but then I picked up another one halfway through the year. But each one of my trades is listed. Okay? MRO, that's Marathon. INTC, Intel, WIN, Wynn Resorts. M, Macy's, MPW. It's a REIT, Real Estate Investment Trust. Okay, yeah, there are some of those I do, if the numbers work. How much money did I make that week? Week number 19, 1.27. Okay, so all the numbers are there. Okay, 2.5, 1.39, 1.72, 1.91, blah, 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 blah. They're all there. So yeah, I do share my trades. You do get to see each and every one that I do. Each and every one of my trades is available. Okay, JD, Macy's, Able Mall. That's it? Just those 3? All right, whatever. 1.39 that week. Okay, do I make 1% every week? No. Sometimes I don't. Sometimes I make more. Sometimes I make less. But the average, last year's average was 1.2% every single week. There was a couple of weeks I lost money last week. Okay, do I make money all the time? No. Once in a while I lose money. There was one here. Here, look at this one. Wynn, Marathon, AEO, Lowe's, Able Mall, Macy's, Bitto, Macy's, Starbucks, MPW. I actually only made 0.57. That's it, 0.57 that week. It's like a 0.5%. But the next week, 0.82. That's not good either. 0.81, 4.7, 0.98, 1.1, 1.4, blah, 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 blah. But it averaged last year over 1.2%. It was a nice year last year. All right, let's get out of that. You guys don't need to see that. All right, back here. So, do you like Coca-Cola? Are you okay with less than 1% every week? Because even at a 0.5% a week, that is over 24% per year. Are you okay with that? Well, should be. All right, what do we have next? Trevor, you want to get set up? Okay. There will always be someone who wants to buy your options. Yes, there will be. Always is. So, battle axe being in real estate and use my insurance policy. Okay, wonderful. It's a great plan. Ames draw. Okay. Ames draw. Can I have your thoughts on COP? ConocoPhillips. I like ConocoPhillips. It's actually on my list. Here we go. Are you ready? ConocoPhillips. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Okay, up, down, up, down, up. Okay, that's the motion for the year. It gives us an idea. It's dropping. It found its bottom here. Now it's going back up again. Okay, lovely. What do the numbers look like? Is it going to be financially feasible? Am I going to get my 1% or am I not? 99.53. Well, the 100 is going to be the closest, and that's going for 59 to 66. Sorry, for me the numbers don't work. Okay, for $99.53, I'm looking to get a minimum of a $1 premium because that's 1%. $1. So the numbers don't work for me. Sorry. Junior B, yes, I do have a Discord. Hey, Laurie, don't give them a hard time. Laurie, you know what they say? If you don't have enough haters, you're not doing something right. So I appreciate haters. I do. But I wish they'd give me something more to go on rather than, just name calling and spewing out nastiness. Trevor, okay. Felix wants to take a look at Tractor Supply. TSCO. Okay, so here's Tractor Supply. At a glance, quick look. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up, down, up, down, up, down, up. 55.87 at this moment. The closest one is going to be the 56. The 56 right here, 75 to 85. That is well over 1%. So the numbers look good for Tractor Supply. All right, so let's take a better look at the chart. Is it the right time? Well, we know where the high is, we know where the low is, and we know the overall direction. Going to the upside. Well, that's great for the year. Let's chunk it down a little bit and let's see what it's done over the last 90 days. But first and foremost, the low of the year was back in the middle of February last year at 46.19. Okay, the high of the year back in the middle of October, 61.55. Well, look at the movement of the last 90 days. Okay, up, down, up, down, up, down, up. I'm looking for patterns when I look at the last 3 months because you and I and everybody else out here, we are the investors. We buy, we sell. What are we looking for? We're looking for profit opportunities. Well, Tractor Supply, it's currently at 55.87 and it looks like it's going to the upside. Well, let's zoom in a little closer just to make sure. Okay, here's the last 30 days. And that should paint a certain picture. One look. High, low, where was it? Where is it? What's the direction? Down, up, down, up. Well, that's freaking simple. Look where the high is, way up here. Look where the bottom is, way up here. Now we have 3 days to the upside from the 30-day bottom. For me, that tells me the profits were taken here at 59, okay, because it went from 52 to 59 is a $7 increase, which is what, 15%? A 15% increase from here to here. Yeah, people jump ship, say, I'm taking my profits. Boom, now she's down here. Okay, so now you have people like, wait a minute, 52.50 for Tractor Supply? Hell yeah, I'm going to buy some. So now the stock starts to go back up again. That's all there is to it. Supply, demand. All right, well, 59 is too high. I don't think it's worth 60. I want to sell, get my profits. What do you mean it's down at 52? Hell yeah, I want to jump back in and get it at 52. Well, because they consistently are profitable. Well, why wouldn't you? Now, most people buy and hold for years and decades. Okay, there's absolutely nothing wrong with that. That's not what I want to do. I'm retired. I need cash flow. And it's weird that the human species is the only species on the planet that's got to pay to live here. So if I want to live comfortably, I need some type of cash flow, and it's got to come from somewhere. Okay, and I'm not going to trust somebody else with my own money. I can do a better job myself. Okay, so I like Tractor Supply. I like the numbers. I like what it looks like. What does it normally do this time of year? Well, it's the first quarter. Well, up in the Northeast, there ain't going to be anyone planting seeds or mowing the lawn. Not in the winter. So what usually happens this time of year? Well, let's find out. There we go. Look at that. Isn't that gorgeous? Look at January to December. You buy in January, you sell in December. That's 10 years worth of movement on average. What does it do January 1st to December 31st? On average, it goes up. Well, that's freaking great. All right. The blue line, that's this year. The blue dot, that's today. So let's zoom into that and see what we can expect. Not that it actually, predicts it. It's just, it is what it is. It's the average movement over the last 10 years. Okay, well, here we are right here. This is today, the little blue dot. Here's the intersection right here. So she's going to go up just a little bit, and then she's going to slowly come back down. So we got 1, 2, 3 weeks to play with this thing. Okay, 1 week, 2 weeks, 3 weeks to play with it before she goes down. So can I jump in, make my profit within 1 week, jump on out? I'm only looking for 1%. I mean, everything is ideal. The numbers work good. The chart looks great. The seasonality looks okay. So let's see what one looks like. Let's get out of here. Whoops. Let's change back first. Let's change back. Okay. Covered call. Remember, we're going to change this. Do a covered call right there. It's at 50. Right over here. 57. Sorry, 55.87. So we look at the 56s. The 56s are right here. All right, so let's do the 56s. The 56 right there. We just want to do one. And we want to do a market order. And here's Johnny. All right. Uh-oh. By one, covered call TSCO. That's Tractor Supply. 100s. Those are the weeklies. 21 February 25. That's next Friday. The 56 call strike against the stock at the market open. That's the order right there. That green line. That's the order. The break even's right there. Maximum profit $93 per contract. Let's get out my calculator. Clear that. $93 is my profit. To buy 100 shares is 5,500. Divide 5507. My rate of return for 1 week, 1.68. Well, that's over 1%, right? So if I get 1%, do I like Tractor Supply? Yeah, I do. Do I like where it is? Well, yeah, I do. The chart looked okay. Okay, the 1 year chart, the 90-day chart, the 30-day chart, the seasonality chart, they all looked good. Okay, so do I like it? I can get 1.68% for the week. What does it have to do? It has to stay above 5507. Well, right now it's at 5587. So it's got to stay above 5507. That's the break even. Can it do it? I don't know. Number one question, does it make sense? Number two question, do I like this company? Number three, do I like this company at this price? Number four, do I like it at this price? Am I okay with holding it for however long it takes for it to hit 56? Okay. Right now it's at 55.87. I'm selling somebody the right to buy it from me at 56. Okay, for that privilege, they are paying me $93 per contract, which is 1.68% every single week. Okay, yeah, and it's going to take you 5, 10, 15 minutes a day. It'll probably take you a little bit longer until you get the hang of it, because you're coming up with new words. You're coming up with new phrases, new terminology. It's kind of like, do you remember when you first started to drive a car? Okay, before you sat in that seat, you probably didn't know the mechanics of the key, the engine, the gas pedal, the brake, the shifter. Is it a clutch? Is it a 4 on the floor? Is it 3 on the tree? Does it have 5-speed with an overdrive? There's a lot of things you didn't know when you first learned how to drive. But eventually, you learned one thing after another. Well, this is the same thing. You're going to take responsibility for your own money, and you're going to say, all right, great. Do I like Tractor Supply? Well, great. Tractor Supply is a great buy right about now. Usually, let's get out of here. Back to where we started. Okay, so here's the seasonality chart. Usually, Tractor Supply goes up very nicely all year long. That should be almost a no-brainer. If I'm buying, we're into February, okay, we're here. Okay, we got a long way to go. Look at the first quarter. First quarter looks nice. Going into the second quarter looks nice. The second quarter has a little bit of a pullback in May. But that's okay, because in June, she starts that trend going up again. Does it make sense? Do these numbers make you say, wait a second, that actually looks like a decent investment? And then you do your research on Tractor Supply. How consistently profitable are they? What is the dividend look like? Is it increasing all the time? Okay, if I buy it here, is it going to continue to go up? Well, it's done it in the last 10 years. Can it continue to do it? Maybe it will, maybe it won't. All right, Joe Burraman, how it's happening? Wants to take a look at U.S. Steel. I love U.S. Steel, and as a matter of fact, I own some U.S. Steel. I'm not happy with U.S. Steel at the moment, but I do own some. All right, so let's take a look at U.S. Steel. X. Here we go. All right, so let's take a quick look at the chart first. Here's the high, 48. Here's the low, 27. That's where it was. This is where it is. Look at this thing. It stays within a channel between 36 and 42 all year long. It just stays right there. Okay, it jumped up a little bit there, and it dipped a little bit here and a little bit there. But other than that, it just stayed right in that little channel. Okay, that's the 1-year chart. That's what it looks like. Okay, so I'm okay with the 1-year chart. Let's check out the numbers. It's currently at 39.29. The closest one's going to be the 39, and it's going for 118. Well, you take 29 cents off because you're going to lose that anyway. Take that off of this. $89. So you're making 89 cents on a $39 stock. So that's over 2.5%. 2.5% for 1 week is over 120% for a year. That's not bad if you like U.S. Steel. Now, I have U.S. Steel at 41, which is right here. Now, I had U.S. Steel at 41 way back here in December. And it slowly dropped. And I was getting nervous when I was at 30. I owned it at 41 and it dropped down to 30. But I don't believe in selling at a loss. So I write a covered call every single week. Even as it's dropping, I'm still writing covered calls against it because I want something to come in. All right. So that's U.S. Steel. The numbers look good. A year ago, we were at 46.08. The high of the year, $48.08. That was back in the beginning of March. The bottom of the year was the end in the beginning of September. That was $26.83. The last 90 days, look at this. The high, the low, where was it? Where is it? Look at this. It was at 38. a year, 90 days ago. It's at 38 again. So she went up, she went down, she went up. Basically the same place we were 3 months ago. All right, last 30 days. All right, our 90-day high, 43. Our 90-day bottom, 29. Last 30 days. Here's our 30-day bottom, right here, 35. 30-day top, 41.50. That's a $6 increase. Okay, that's close to 20%. It's like 18%, 17% from the bottom here to here. Okay, profit taking. Well, now she's starting to come down. We're at 38.55 at the moment. Do you like U.S. Steel? What does it normally do this time of year? Well, here we are right now. Okay, middle of February. She's going to go sideways with a slight upward tilt to at the end of the month, and then in March she's going to jump on up. Well, I don't mind keeping on to my U.S. Steel. I get 1 to 2% every single week, so I have no problem with it. I'll keep it on. I'll keep it if I have to, which I don't mind. Like I say, rule number 1, never buy something you're not willing to hold on to for a long time. All right, that being said, next. Do you have a paid Discord? Junior, yes, I do. Okay. Lalo, how can I earn $200 weekly from dividends? And how much would I have to invest? Well, $200 weekly, you're going to need at least $20,000. Because 1% of $20,000 is $200. That's $200 a week, every single week. That's $10,000 profit every year. 50%. 50% of $20,000 is 10. All right, anyway, let's keep on keeping on. That was U.S. Steel. So what else do we have here? Oh, holy cow, I get 99 questions. Jay Monroe, how are you today? Alex Abba, how are you today? Encourage more people to share. Okay. How about KHC? Jay Moore, let's take a look at Heinz ketchup. KHC. Ooh. Now I'm going to say no to KHC. Not that I don't like it, but look at where we are. We're actually at the bottom of the year. Now this is one I will just take a look at it and I'll keep my eye on it because it's at the low of the year. You're going to make the most money buying low, selling high. Well, Kraft Heinz is over 100 years old. They've consistently increased their dividends for over 5 decades. They're consistently profitable every single year. However, as she's dropping, not time to buy. When she finds the bottom, turns around, goes back up. So I'm thinking maybe Friday, Monday, Tuesday, Wednesday, somewhere in that area will be a good opportunity to jump in if the numbers work. Right now, 28.67. The 29s are going for 27 to 33. So yeah, you'll get your 1% out of it if you like Kraft Heinz. Now, I do like Kraft Heinz, so I will keep my eye on it for the next couple of days. Find that bottom, turn it back around. Okay. Amazon. BB. What do I think about Amazon? Okay, BB, don't take this the wrong way. No dividends. No thank you. Amazon doesn't have dividends. Amazon has never been profitable. Sorry. It's me, Lex. Hey, I want to share. I made $70,000 since 2024 following your strategy. Cool beans, Lex. Way to go. Good for you. Layla, you're welcome. What the hell were you thinking? Trevor, you're absolutely right. All right, so let's keep on going. Southall, how are you doing? Flash, what if stock you're holding decreases over time? Well, Flash, that's what stocks do. Hold on, let's back up the truck for a bit. Okay, Flash, you ready? Here's the high right here, $39. Look, it's going down, it went up, now it's going down. That's what stocks do. It's going to get to a point where it finds its bottom, it's going to turn around and go back up again. Because what else do stocks do? They go up, they go down. They go up, they go down. Kraft Heinz has been around for over 120 years. 120 years. You don't think they've seen this before? Forget about the numbers. Okay? Don't pay attention to the numbers or the dates. Do you see this movement right here? You think Kraft Heinz hasn't seen that before? Okay, well, it's here now. 28.62. Does it make sense now? Not this. That's the past. Nothing you can do about that. This is where we are now, going forward. All right, does it make sense to jump in now? This company's been around for over 100 years. They've consistently increased their profits every single year. So why would you not? That's the question. All right. Next. Can you share the 5 rules? Southall, yes, I can. You ready? First and foremost, there's 5 criteria. Criteria means I'm teaching a 9-year-old how to invest. It had to be simple, safe, predictable, consistent, and no way for her to lose. That last one is going to be a little tough for you guys because I have no control over what you do. But I did have control over what my daughter did, and I did say, honey, if it's not on the list, don't go near it. I have no control over what you guys do, though. All right. 5 rules. Rule number 1, never buy something you don't understand. It means you should know what the numbers look like. What do I mean by that? What's the 52-week high? What's the 52-week low? How consistently have they been profitable? And do they have dividends? What's the current yield? What has it done in the past? Okay, that kind of information. Don't buy something unless you understand it. This is your hard-earned money I'm talking about. All right. Rule number 2, never sell at a loss. It defeats the purpose of the game. And it is a game. Don't kid yourself. Rule number 3, make sure the company's consistently profitable. If you have to, look at the annual reports for the last 20 years. It's your money after all. Where are you going to put it? Rule number 4, for me, it's weekly options only. Remember, simple, safe, predictable, and consistent. Predictable, I already know what I'm going to make because it's a covered call. I already know what the profit's going to be before I do it. That's predictable. Consistency, well, I'm getting that because look, 14 February, 21 February, 28 February, 7 March, 14 March, 21 March, 28 March. Every single week I can do this. Once I own the stock, I can write a covered call every single week until it hits my target. And when it hits my target, great, I'll have all my money back again. And I'll pick up 1% or 2% every single week. It's really not that difficult. All right. Oh, and rule number 5, make sure the numbers work. All right, next. We still have 99 questions to go through. All right, Shumley. Shumley, are you serious? TXRH, I never heard of it. Now, Shumley, I've been doing this long enough to say with confidence, if I've never heard of it, most likely it's going to be a no. TXRH. Oh, imagine that, it's a no. Okay. When I say 20 years of consistent profitability, hey, this might have it. But it doesn't have weekly options, which means I can only do it once a month, and once a month just doesn't work for me. Izzo, I think you are looking at it all wrong. Oh, cool beans, Irizo. Let me know what I'm doing wrong. Love to hear your opinion. Convixed, what's your opinion on the stock, on a stock RSI, or relative strength index? Okay, you're missing the point when I say I created this for a 9-year-old. Now, if I asked you if you understood what the relative strength index is, where it came from, what it means, how to measure it, and the significance of doing it when it's low as opposed to doing when it's high, would you understand all that? Well, a 9-year-old sure as shit ain't going to understand it. So, yeah, no. It's simple. Is the stock going up? Is the stock going down? That's it. Is the stock going up? Is the stock going down? Is it more than 1% or is it not? It's actually that simple. Adults have a tendency to make it more complicated than it needs to be. MF2002. You want to be invited as a host. I'm going to have to decline because I have no idea who you are. Anthony Garcia wants to take a look at Hershey. We'll get to that in a second. What stock pays 1% weekly? Lalo, you're just new here. Okay, sit back, relax, watch it, see if it makes sense, and then you'll see which stocks actually do fit and which ones don't. Makes sense what you talk about. I don't know anything about investing, but I want to learn. Thank you for the information. Helpful. All right, lay low. I'm here every single night, 9 p.m. to 11:30. Okay? I don't charge anything for it. It's free for the asking. Or you ask as many questions as you like. Just make sure you stay on topic. Simple, safe, predictable, consistent 1% per week is what I'm looking for. Pre-qualified dividend stocks, and those are companies that are consistently profitable. I have two criteria only. 20 years, 2 decades, 20 years of consistent profitability. That's one. Second is weekly options. That's it. There's 9,875 companies to choose from every single day. Two criteria will eliminate 98% of everything else. Consistency of profitability, 2 decades, 20 years, and weekly options. There's only about 300 of them, and that's more than enough for me to get my 1% every single week. So, Texas Roadhouse doesn't have 20 years of increased dividends. I know that. It hasn't been around for 20 years. Do I know halal dividend stocks? No, I don't. All right. Anthony wants to look at Hershey's, HSY. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down, up. Okay, so it's coming. Here's your high of the year, around 212. Here's the low of the year, 140. Well, that's an $80 drop. That's a big drop. Okay? But she's bouncing up now, so what does that mean? Well, it looks pretty good. It looks good enough for me to go over to the numbers to see if the numbers work. If I'm getting more than 1%, then I'll take a better look at the chart. But until then, let's see what the numbers look like. 158, the 157.50s, okay, the 160s, no, 158, 157. I'm losing a buck nine. Nope, the numbers just don't work. It's not 1%. Sorry. Ooh, C.A. Smith wants to take a look at J.P. Morgan, JPM. Nope. That was quick. It should take you 3 seconds. Literally 3 seconds to size up a chart. Because if we're looking at the 1 year chart first, 3 seconds. It should all take. High, low, where was it? Where is it? What's the direction? Up. It's at the high of the year. No. I don't buy at the high of the year. It doesn't make sense. Think of it this way. I'm standing on a ladder. Now I'm waiting for someone to bring me a taller ladder. It makes no sense. Okay? The high's right there. Has it ever been 280? Has it ever been 300? Not this year it hasn't. So what makes me think just by me buying it, it's going to take it up there? No. I wait. See, look at here. Up, down. That's the buy. Up, down. Time to 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 buy. Not at the high. Once it comes back down again, turns around, goes back up. See, look. Up, down, turns around, goes up. Down, turn around, go up. Down, turn around, go up. Down, turn around, go up. Every single high, every single low. It's the same thing. Over and over and over again. You just zoom into whatever you want to look at. Okay? Down, up, down, up, down, up, down, up. That's all it does. Stocks do not come to your house, take your dog for a walk. They do not come and mow the lawn, trim the hedges, take the trash out, wash the dishes. No, stocks go up, stocks go down. That's all they do. Okay, so no to Morgan Chase. Sorry, dude, JP Morgan. Bank of America, BAC. Maybe. Okay, quick look. High, low, where was it? Where is it? What is it doing? Up, down, up, down, up, down. Well, it's coming down right here. So let's take a close look at that right there. Is it worth us taking a look at? Yes and no. Yes, because she's coming off of a... See, here's the 30-day bottom, 30-day top. Now you get profit taken. Now it's going to keep dropping until it gets low enough where it starts to turn around, go back up again. That's the only reason it's a yes, but it's a no because it's coming down. So maybe next week or the week after. So I'm going to write this down for next week, so we'll keep our eye on it. Okay. Yes, I write stuff down in the book only because I don't trust computers. Sorry, I'm from that generation. We created the damn things, and no, we don't trust them. Some of us don't. All right. No to Bank of America. Sorry, Smith. Pradeep Kumar, how are you today? Now, this is entertainment. Yoshibi, how are you today? Layla, that was quick, yeah. Uh-oh. Irizo, dude. All right, now, Irizo. Now, you and I haven't exchanged very much of anything. But so far, by seeing all the things you're requesting me to take a look at, dude, you're definitely in the wrong place. Everything you asked me to take a look at, for me, is a no, and there's a good reason why it's a no. I take a look at the numbers, which clearly you don't. Okay, now what I mean by clearly you don't look at the numbers, well, let me show you what I'm talking about. JEPI. Okay, here's JEPI. This is what I mean you're not looking at the numbers. The very first dividend was 2020. Do you see it right there? July 2020. That means this thing is 4.5 years old. So when I say 20 years, 20, 20, or 20, 20, whatever, 20 years. This is 4 years, 4.5 years. So what makes you think that's fits? But hold on. Kind of gets worse. It does. Hold on a second. Let me show you what I mean. 2020, 49 cents. The very first dividend was 49. Very next one was 29. Explain to me why you think decreasing by 25%, a 25% decrease. Actually, wait a minute. Is that 25? Yeah, all right. So it's over 25% decrease. Why you think that's good? But hold on. It gets worse. Rizzo, hold on a second. So 49 to 29, that's backwards. 45 to 44, that's backwards. 52 to 50, that's backwards. Where is it? 54. 54 to 26, that's a 50% decrease. How can you possibly say that this is good? Okay? So you got 25% decrease, 5% decrease, 50% decrease, and then it goes 32 to 35, 37, 31 backwards, 40, 26 backwards, 34, 34, 37, 38, 46, 38 backwards, 46, 59, 47 backwards, 52, 62, 50 backwards, 56, 48 backwards. This is your classic 3 steps forward, 2 steps back, 2 steps forward, 1 step back, 1 step. Yeah, no. JEPI, you didn't even check the numbers. Now I can tell you didn't check the numbers. Well, number one, it's only 4.5 years old. When I say 2 decades, is there some discrepancy between my language and yours? 2 decades is 20 years. JEPI is 4.5 years. So either you weren't listening or you're just disregarding everything I say. What's good? SPY, hell no. ODTE, double hell no. Thank you, Pressure. All righty. JP Morgan, Bank of America, we looked at those. Ford. Dirk wants to take a look at Ford. Uh-oh. Missed all these questions. Oh, boy. All right, I got to go. Oh, there it is right there. Okay, back to where we are. All right, Dirk wants to take a look at Ford. All right, let's get out of here. Let's go take a look at Ford. High, low, was, is, direction, up, down, sideways, down. 923, the 950 is going from 4 to 5. That's going to be a no. Simple. I mean, I do own some Ford, but I wouldn't jump into it now because the numbers just don't work. I like Ford, don't get me wrong. Kingpin. Good evening, nice to see you again. A-Lab, huh? A-L-A-B. Okay, interesting. How consistently do they increase their dividends? A-L-A-B. There are no dividends in a selected time period. Sorry, no. Kingpin, you should know that one. Oh, Big Task likes Yum. Did you know that Yum Brands, Y-U-M, used to be a dividend king? They decreased their dividends. They got booted. Now they got to start over again. So they're not quite back up there yet. But let's take a look at Yum. Y-U-M. Okay. High, low, where was it? Where is it? Down, up, down, up, down, up, down. It's at 260. The 260 is going for 660. Holy shit. I'm looking for $2.60. It's offering 6. That's almost 3%. But the question is, do you like Yum Brands? Don't. Okay. So, a year ago, we're at 370. We top out at 406 back in the middle of July. Okay, and then we bottomed out the beginning of October. All the way down to 212, 213. Shoots up, pulls back. Look at this. High and low. Where was it? Where is it? Up, down, up, down. Okay, that's the current direction. That's the momentum. That's where she's going. The last 30 days, okay, down, up, down. Here's the new 30-day bottom. What usually happens on a 30-day bottom? It usually goes back up. But I don't like to jump in on the bottom until I have 2 days on the opposite side going to the upside. So this would be, why am I looking at Humana? I wanted H-U-M, Y-U-M. I'm looking at the wrong one. Sorry. But it's Humana. Okay, it's still on my list. But let's take a look at Yum. Y-U-M. Oh, yeah, Yum Brands is a no. Monthly options, I don't do monthlies. That was Humana. Sorry, that was my fault. Momotion. What do we think about RR? What the hell is RR? It's never a good thing when I say, what the hell is that? No options, dude. Sorry. AT&T. Too high. Ricey. Never heard of it. R-Y-C-E-Y. Rolls Royce. No options. No thank you. INS. What the heck is that? It's a no is what it is. USB. USB. Isn't that US Bank Corp? Okay. US Bank Corp. The high, the low, where was it? Where is it? Up, down, up, down. Here we go. 48.99 to 47.49. So 47.50, 66 to 73. That's a yes. The numbers look good. Well, let's look at the chart. A year ago, we're at 40. We bottomed out in the middle of June at 37.80. Okay, look at our high right here. 54.03, the 90 days. Look at high, low. Where was it? Where is it? Up, down, up, down. Okay, that's what it's looking like. Look at here. Things turning around right there. So let's zoom in a little closer and see what it looks like. Okay, 30 days. High, low. Where was it? Where is it? Look at the movement. Up, down, up, down, up, down, up. Okay, 2 days to the upside. There we go. Yesterday and today. Do I like this? Let's check out the seasonality. See, does it normally move this time of year? Okay, we are right here. Okay, we're here. Here's 1 week, here's 2 weeks, here's 3 weeks, then she drops. Okay, do I want to jump in this for 3 weeks? Look, that's the average movement over the next 3 weeks. Well, what is it normally doing? What's it doing right now? Well, right now, she's bouncing off of this bottom right here. See, here's your high. She's down. Now she's going to go back up again. Is that guaranteed? No, it's not guaranteed. It just looks that way. Stocks at a high, you got profit taking, it comes down. It gets so low, people like me say, hey, that's a good deal. Let's jump in, and then the stocks go up. What does it normally do this time of year? Normally, it's a bank. They don't do anything new. They don't come out with new products. All right, so that's USB. If you like it, that's what it looks like. SIGI, never heard of it. But let's take a look. Because I think you guys want me to take a look at it? I'll take a look at it. SIGI. No, I don't do monthlies. The numbers just don't work. Sorry, dude. Where would you really leverage? Wait a minute. Would you really leverage in already 3x leveraged? No, I'm only 50% leveraged, 1-to-1. You know, every dollar I put in, I borrow a dollar against it. So yeah, I have a margin account. I've been doing this long enough to understand what the risks are. I never tell a new person. Actually, I always tell newbies, don't do margin until you understand the risks. You can lose a hell of a lot if you're wrong. All right. Michael Leonard, AIPI. I never heard of it. AIPI. Yeah, no. All right, monthlies, the numbers just don't work. Sorry. Okay, we already looked at USB, Bradley. Sorry. Motion. What about Rich Tech Robot? Isn't that RR? No options, dude. No. Uh-oh. Jesse wants to take a look at BBAI. BBAI. He just wants me to say no. All right. Now, BBAI, Big Bear Holdings, was at $1.50 last year. What makes you think this company has 20 years of increased dividends? Seriously, what makes you think that? All right, so let's go here. Okay, let's go BBAI. Okay, Big Bear AI Holdings. Okay, so when I say never invest in something you don't understand, if you understood this, Jesse, if you understood that there are no dividends for this company, why would you mention it to us? The name of the show is Dividend Stock Talk. And then the subtitle is Dividend Investing for Weekly Cash Flow. Yet, BBAI has no dividends. And don't think I'm going to let you get away with this either. Michael Leonard, MSTY, has no dividends either. Both of those are no. Okay? And Momotion, I just told you, RR, Rich Tech Robotics, has monthly. No. RYCEY, Rolls Royce, sorry, no dividends. No options. FHTQQQQ isn't a company. Yeah, I know that. TQQQQ is an electronically traded fund. You're giving your money to a computer to invest for you. Okay, nothing wrong with it if that's what you're with. Do I like McDonald's? MCD. MCD. Oops. Let's get rid of that. MCD. Mickey D's. No, not this week. I'm not saying no for I don't like it. I'm saying no because it's at the high of a 30-day period and profit taking's already started. See the big gap up right here? 30 days ago, 277. Now you're at 312. That's a big jump. Okay, today, profit taking has already started, so this thing's going to start to come down. That's just my opinion. Never blindly trust anyone on YouTube. Do your own research. I just point and click. Okay, these are the numbers. They're not my numbers. This is what's available from any financial website or any trading platform that you may use. All right, let's keep on going. No, it is not. All right, Michael Leonard, thank you. What do you recommend for weekly ones? Making a difference. making a difference. How are you today? Now, you're new here, your very first time here. Thank you for interacting. You got to be a little bit more specific on your question because that is a little subjective. So many of those weeklies lose value after dividends are paid. Well, Michael, you're absolutely 100% correct. I applaud you. You're 100% correct. I am telling you, you are right. Okay? But I also said earlier that you were not paying attention to. I don't want to collect the dividends. I want to buy it before the dividend's paid, grab my 1%, get the hell on out, and then move on to another company. Okay? IWMY. No. IWMY. IWMY. Okay. I can tell you right now, Michael, that's a hell no. I don't do monthlies. The numbers just don't work. Okay? I don't do those. The numbers just don't work. Weekly options only. Okay, so now we have another one. Free Willy. Another person who doesn't listen. SCHD. Seriously, dude. Check the numbers of SCHD. SCHD. All right, here we go. Dividends for SCHD. Are we ready? Wait a minute. 2011, that's not 20 years either. Let's check out the numbers. Are you ready? 4, 5, 7, 8, 9, 8. That's backwards. 9, 13, 12. Backwards. 14, 16, 15. Backwards. 18, 20, 21, 22, 21, 20. Backwards. 22, 25, 20. Backwards. Again, a company that's not 20 years old. Hell no. Again, a company that's not consistently profitable. The numbers go up, the numbers go down. I don't know why you would invest in a company that's not consistently profitable when there are companies that are consistently profitable. Okay? SCHD is not. Sorry. Thanks. I appreciate the info. Hope to join in again. Hey, I'm here. Just let me know. Patrick, always making money on Intel. I am. I hope you are too. Is Intel a dividend maker? Yes, it is. Chase and Jack, James, can I do this with my money in a Roth IRA? Yes, you can. All right, this is funny since Intel actually pays quarterly dividends. Yes, Michael, they do. But they also have weekly options. So if I can write a weekly option on the stocks that I already own, okay? So if I have, hold on a second. Intel, right here. Okay? I already own Intel. My average price is $20.70. I sold the $20 call option and I got 71 cents. That is over 3% for 1 week. If I do that every single week with Intel, I can make over a 50% profit on Intel alone. So why would I sell if I make over 1% every single week with Intel? And yes, Intel does have dividends once every 90 days. Am I looking for the dividend? No, I'm not looking for the dividend. I invest just before they pay the dividend because just before they pay the dividend, the stock has a tendency to go up. And if I know when the stock is going to go up, knowing that is only half the equation. What trading strategy do you use when you know a stock is going to move? Now, stocks move for 2 reasons and only 2 reasons, and do not kid yourself that there's a third. There isn't. There is a known reason, which we know why it's moving, and there is the unknown reason. I mean, it's moving for a reason, but we don't know why. Well, what's an unknown reason? Well, an unknown reason could be a heart attack. CEO of the company could have a heart attack, and it could affect the stock, and the stock could drop. We don't know when that's coming. A natural disaster, flood, storm, hurricane, tornado, earthquake, brimstone and fire from wherever. We don't know when those things come. That is an unknown reason. You can only react to that. A lawsuit comes out of nowhere. You do not know it's coming. It just shows up. That is an unknown reason. You can only react to those. You can't plan on those. Those are not predictable. Those are not consistent. Second reason, a known reason. Something you know is coming up. So what do you know that's coming up? Well, I know Valentine's Day is coming up. What the hell does that mean? If you only knew. Valentine's Day is coming up. Hershey's goes up just before Valentine's every year. Why? Why do you think? Well, the holiday. You've got Valentine's Day, and then right after Valentine's Day, you got Easter, the two biggest chocolate days of the year. So yeah, Hershey's goes up in the first couple of weeks just before Valentine's Day. What else do we know? Well, certain stocks move just because of the weather. Winter, spring, summer, fall. Companies run differently in the summer than they do in the winter. It comes every year. You know also comes every year? Earnings reports, dividends. Those are known factors that affect stock price. Just before the dividend is paid out, stocks have a tendency to go up. So we know 4 times a year when a stock is going to move. It makes sense. Okay? Anyway, 1 or 2 reasons. Okay, so yeah, my price, 2070. I sold off the 20s. I picked up 68, 83, 140 per share. That's more than 1%. That's more than 2%. So why the hell wouldn't I continue doing it on Intel? All right, let's get out of that one. All right, so no to that stock. Let's keep on going. But Michael Leonard, I appreciate your interaction. Okay, and you're absolutely right. Intel does have quarterly dividends, but it has weekly options, and I do trade weekly options every single week against Intel until it becomes not worth it. Okay, so it's always a numbers game. What am I buying it for? What is the option price right now? Am I making my 1 or 2% or am I not? Should I get it? Should I not? The simple questions. World you want to live in, girl. Hey, James, do you sometimes roll as a stock goes up past your target? Sometimes I do, but it always comes down to the numbers, okay? What are the numbers telling me? Where is the stock moving? Let's go to Intel. This one looks ridiculous, INTC. It's nothing I would ever do, so I don't know why we're looking at it. INTC. Okay, so I got Intel at 20. Well, right now it's at 22.48. And yes, I did sell a covered call against it, trying to get at the 20, pick up another 1 or 2% for next week. Okay, fine. Well, I will let it go now because it's over above what I have. Now, I could take a look on Friday. Does it make sense for me to hold on to it and roll it forward? Because it's above what I paid for it. Can I get another 1 or 2% by rolling it forward? If I can, great. If not, I'll let it go. It's always, always, always about the numbers. Oh, Luke, POV, PLTR. Dude, seriously, check out the dividends for PLTR and you'll probably say no. Okay, Michael Leonard, you are absolutely, I don't know how many times you want me to tell you. You are absolutely correct. Intel pays quarterly dividends, not weekly. As a matter of fact, Michael, I never, ever, ever, ever said anything about a dividend stock paying dividends on a weekly basis. When I say weekly cash flow, I'm talking about weekly stock options, not weekly dividends. I don't know anyone who pays weekly dividends. Make a difference. Do you think Intel is that way because of NVIDIA? No, because Intel's been around long before NVIDIA. You should replace Jim Crater at CFO. No desire. Okay? Sell covered calls, dividends are for chumps. Thanks, Biggs. Okay, you can have both. Yes, you can. Way too toxic. Michael Leonard, I have no idea what you mean by that. Chatterbox, good morning to you. How are things on the other side of the world? Cool beans. All right, BTI BTI. Okay, what the heck is BTI? BTI. No. Was it that quick? 2 reasons it's a no. Reason number 1, it's at the high of the year. Hell no. Reason number 2, monthly options. Now, it's very easy to understand a monthly option because the key word is right in that phrase, monthly option. Monthly. 12 times a year I can do this. That's it, 12. Now, I didn't go to college, I admit it freely, but I do know 52 is better than 12. 12 just doesn't work for me. 52 does. It's actually that simple. No to monthly, yes to weekly. Okay, BTI, no. Sorry, dude. Jay Moore, glad you like it. CVNs went to the moon today. Yeah, I saw that. And I actually have some CVS. And Andrea, how are you this evening? See, the interesting thing about CVS, okay, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, sideways, down, up, big jump. All right, now I do have some CVS and a little fickle about where it is. I'm thinking here with this big jump here, I'm hoping this thing comes back down this week or next week. I did push my options off till the end of the month. Hopefully it'll come back before then. Hello, 172. Please do Micron. Looks deeply undervalued and oversold for a rapid growth. Okay, Micron, MU. Oh, I like the way it looks. Here's your high. Here's your low. Here's where it was. Here's where it, look at the movement. Big jump up, big drop down, back up, sideways down, and here we are right here. We're currently at 90, 91, 96. We're looking at the 92s. So the 92s, nice, 235. That's 2.5%. Well, I like 2.5% on a weekly basis. But does Micron fit? Now, I did try Micron before. I don't think they have 20 years of increased dividends, but I have traded them before because the numbers look good. And yes, I do bend the rules once in a while for certain stocks, depending on where I got the advice. If I get it from Warren Buffett, then yeah, I'll do it. If I get it from somebody else that I respect and who is a good proven trader, yeah, I'll take a look at it. Yeah, I done Micron, but they don't have 20 years of dividends, just to let you know. All right, so a year ago, we're at the bottom of the year, 79.48. The high is 157. That's almost a 100% increase. Almost. From 79 to 158, it's almost 100%. Now she drops. She goes from 159 down to 85, which is almost a 50% drop. Don't you see that something's not right there? Okay, here to here is 100%, but from here to here, almost back to the exact same spot, 50%. Isn't that weird? She jumps up 100%, and then she drops 50%, almost the exact same amount, but it's 50%. All right, then she goes up, sideways, down. So, do I like it? Yeah, I like it. Will I trade it? Yeah, I will if everything looks good. Okay, last 90 days or the last 3 months, look at the movement. Okay, sideways, up, down, up, down, up, down. Okay, what's it doing next? Can't really tell. Let's zoom in a little bit closer. See what it looks like for the next week or two. All right. Down, up, down, up, down. Well, look at where it is. 1, 2, 3, 4, 5 times it tried to go below 87 and it didn't go. That's what you call some pretty good support. 5 times. 1, 2, 3, 4, 5. And it just wouldn't go lower. Okay, so this may be the low of the year. Might be. Ask yourself the question. Buying low, selling high is a great idea. You can't get any lower than the low of the year. So, what do the numbers look like? Currently at 92.20. So the 92 is going for 235. The 93s are going for 191. Okay, both of those are over 1%, over 2%. The 94s are even over 1%, and the 95s are over 1%. any one of those is going to work out just fine if you like Micron. Let's take a look. What does it normally do this time of year? Normally this time of year, here we are. Here we are right here. It doesn't look that pleasant. For the next 2 weeks, he's going to go sideways, then drop, and then shoot back up. Is that guaranteed? No, it's not guaranteed. That's just what it's done on average over the last 10 years. So you take 2015, 2016, 2017, 2018, 2019, hey, that type of thing. So, sideways for a little bit, dip, shoot back up. Is it guaranteed? No. There's only 3 guarantees in life. Okay? Death, taxes, disappointment. Get over it. It is what it is. Okay? Either you like Micron or you don't. All right, let's move on. Let's keep on keeping on. Keep on keeping. All right, here we go. Next. Matrix Revolution. Hello, I'm new here. Well, hello to you too. What are your thoughts on trade tariffs? Trump is putting on Australian goods. Interesting. Barry, thanks for the info. Looking forward to tomorrow. All right, Barry. Okay, so Matrix Revolution. Here are my thoughts on tariffs. Number one, I don't have enough information to make an educated guess or an educated opinion. There's a lot of nuances about what do you call those things? Tariffs. What are they exactly? We know what they are, but why is he using it in the way that he's using it? Okay, he wants to talk about the unfair trade balance. Okay, so if we take products and ship them over to Australia, what tariff are they putting on our products? Their products are coming from Australia over to here. What tariff are we putting on theirs? Don't you think they should be even? If they're charging us 10%, shouldn't we charge them 10%? If they're charging us 3%, shouldn't we be charging them 3%? Fair is fair. Okay? So I don't know all the information. I don't know what tariffs are put on American goods going over to Australia, and I don't know what tariffs are putting on Australian goods coming over here. So I can't answer that question. All I know is the simplicity of tariffs. Okay, a few things I do know. It should be even. If they're taxing us 5%, we should tax them 5%. That's fair. Also, tariffs. Let's understand our history. From 1776 until 1913. Count the years. 1776 to 1913. The U.S. government ran perfectly fine. 100% funded by import taxes or tariffs. 100% of the government's spending came from tariffs. Until 1913, we started paying that shit. And if you've been paying attention to Doge, you see what they're paying paying with our money. Some weird ass shit. So tariffs, don't get me started on politics. Let's keep on doing what we're doing. Micron, if you like it, great. Those are the numbers. If you like it, that's it. Do you like it? Does it make sense? Okay? Please, let's stay away from politics and religion. Yeah, I get that. You have a free trade agreement with the U.S. Look at it this way. Let's say, hypothetically speaking, okay, I want you to come to the table to talk about something. And you say, nah, I don't feel like it. Great. I'm going to put a big fat tariff on you until you decide to come to the table and talk about it. Until then, suck wind and pay the shit. Okay, it's a bargaining chip. It's a ploy to get Australia to come to the bargaining table and talk. That's all it is at the moment. Okay, you don't want to play the game, fine. You play by the rules of the person who's on the court. You don't want to get in the court, you don't want to get in the ring, you can't complain about the rules. Okay? Let's keep on going. Stacked bundles cooked. Micron is trash. Thank you, Michael. He is not moving off Intel. Sure I am. I see Intel creating new lows, something to watch. Okay, Stack, I'll take a look at it. Intel's looking great. Difference of opinion. How about 27 option for December 2026? Okay, Austin, I don't buy options. I sell options, and there's a reason for that. I like to have odds and probabilities in my favor. Basically, what does that mean? That means 80% of all options expire worthless. So if they expire worthless, why would I want to buy one? Then I'll be looking to get in the 20% sector. Yeah, no thanks. I prefer to be 80% correct. I will sell an option because I want to sell it and have it go to zero. I want it to expire if I'm selling it. If I'm buying it, I don't want it to expire worthless. There's a huge difference between the two. I'm a seller, not a buyer. Okay, so let's keep on going. 12 cents per quarter is trash. Yes, Michael, you're 100% correct. 12% per quarter is trash, but it all depends on what it is you're comparing it to. Okay, if I'm getting 12 cents per quarter, it depends on what my investment is. Everything is relative into what the conversation. Now, you have a conversation in play in your head that you're saying 12% per quarter, 12 cents per quarter is bad. Okay, great. Let me in on the conversation and I'll give you my opinion. But just to say 12 cents per quarter is trash, you need some context to go behind it, to go with it. Because these questions, they stay here, and I don't get them as soon as you put them out. Intel is low payout. Okay, thank you, Michael. You're missing the point of what I'm doing. All right? If, by chance, I'm collecting 1% every single week on my Intel, let's say hypothetically I got $50,000 in Intel, and every week that $50,000 in Intel gives me $500. Well, that's 1%. That's $500 every single week, after week, after week, after week. And then what do I do next year? I do the exact same thing because Intel's been around for over 20 years and they're consistently profitable. So why not? Austin on 1.16. I have no idea what that means. Making a difference. I don't understand the covered call part. Making a difference. How are you, James? James, is Nike finally a buy for you? All right, we'll take a look at that in a minute. Okay, Matrix, I agree. Yes, I agree. Should be equal. Okay, thank you. All right, Luis, we'll take a look at Nike in a little bit. All right. So, making a difference, a covered call. All right. Making a difference. Don't take this the wrong way. The picture in your profile shows you as a blonde girl. I'm going to give you some girl math. See if you understand this. Okay, now, the reason why I call it girl math is because a girl told me, hey, that's girl math. Okay, it is. Okay, I'm not saying you do this, but I do know girls do this. You go to the store, you buy yourself a beautiful, wonderful outfit, and you leave the price tag on it. And you wear it out one night, and you look absolutely glorious, wonderful. Then, once you're done, you have your night out and you're enjoying it, you take that dress, you bring it back to the store and say, it didn't work out for me. You got the use of it, you got your Instagram photos and your what do you call it, glamour shots, and you brought it back and you got your money back. Same thing. You're buying a stock, you're getting something out of it, and then you're getting your money back. I hope that makes sense. That's how some girl explained it to me. E8, FH, we're making a difference. It's when you own 100 shares and those shares are covered selling on a contract. Same thing. Alrighty. Andrea, Whirlpool. I would like 2 days to the downside, but it popped up a little bit. Okay, Andrea, let's take a look at Whirlpool. WHR. Whoops. Helps if I click on one of these things. WHR. Oh. All right, Andrea. You know better. You've been here. This is a monthly. It's an automatic no for me. But here's the high right here, 135. Big drop down here. Okay, and it's still dropping. I don't know why we're looking at it. Okay, here's your last 30 days. Okay. shoots up, big drop down. Here's the bottom, back up, back down. 1, 2, 3, 4, 5 days in a row to the downside. And it's a monthly. So I personally would wait for it to turn around and go back up. I like 2 days to the upside. We're still looking for the bottom. It's still going down. Until it finds the bottom, turns around, goes back up. That's when I would look at it. Jay Moore, what does a covered call completion look like when it expires or it's purchased? Oh boy. Okay. All right. Let's take a look at Macy's, for instance. Okay. Well, no, that's just weird. I hate it when it does that. Okay, so here's Macy's right now. Here's the high, here's the low, here's all the movement, blah, 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 all that kind of stuff. Let's look at the last 30 days. Okay, look at your last 30 days. Big drop, here's your bottom, shoots up, profit taking starts. Here we go, we turn around, here's the bottom, 1, 2, 3 days to the upside. Great time to jump in. Okay, covered call, what does that mean? Well, the stock is currently at 14.78. The safest trade would be the 14.50s. Well, that's right here. It's paying 50 cents a share. Okay? The 15 is going for 25 cents a share. Both of those are over 1%. So if I buy the stock, let's say hypothetically I buy the stock tomorrow morning, 14.91. I sell the 15. Okay? I'm selling somebody the right to buy it from me at $15, which is more than what I paid for it. If I'm paying $14.91, okay, that means tomorrow morning at 9:30 a.m., I will own the shares at $14.91. I will instantaneously, as soon as I buy them, I will sell somebody the rights to buy it from me for 15, which is 9. Now, 9 cents is not a lot of money, but right here is what I'm looking at, 25. So I'm collecting 25 cents a share for each share that I have. Now, I know it doesn't sound like a lot, but let's do the numbers, okay? All right, let's get this out of the way. Let's change this to covered stock. Okay, that's at 14. It's at 14.91 at the moment. So I want to buy the I want to buy the stock and sell the 15. Okay, here's that right there. Let's just do one contract. Market order, so it fills first thing in the morning. This is what it sounds like. Now I'm going to go over everything just a minute. Hold on. Buy one covered call, Macy's 100. Those are the weeklies. 21 February 25. That's next Friday. That means whoever buys this option from me has between when they pay for it and 3:59 p.m. Friday the 21st, which is next Friday. Because at 3:59 p.m., you have less than 1 minute to make your trade before that option expires and becomes worthless if you don't exercise it. Which means you call up your broker and say, I would like to exercise my right to buy this at 15. That's it. I'd like to exercise my option to buy it. And then they buy it from me at 15. Then I have all my cash back on Monday, and I get to do another one and collect another 1%. So if I buy the stock, I own it at $14.52. And then I sell somebody the rights to buy it from me at 15. I pick up $48. I know it's not a lot of money, but we're going to go with a percentage in a second. If it's above 15, I get all my money back, and I get to keep that. What is that? Well, we need the calculator for that one. Clear that. The profit's $48.50. $48.50. See, right there, maximum profit. Now, when I say I want a simple, safe, predictable, I already know what I'm baking before I even do it, and consistent. I can do this every single week. Okay, this week I'm getting $48 per contract. Maybe next week I'll get $50 per contract. The week after that I may get $40 per contract. But I can do it every single week until it hits my target. And what's my target? Well, my target is anything above what I just paid for it. If I'm paying 1478, I want more than 1478. It's basically that simple. And I will keep doing it every single week until I hit my target. And I'll get in 1% every single week. Why not? It's 50% a year. Just makes sense. Okay, so here's the profit, 4850. To figure out your rate of return, you take the profit, 4850, and you divide it by what the investment was, 1,452, divided by 1,452, and that gives me a rate of return for the week, 3.3%. 3.3%. Okay, 3.3%. Well, let's multiply it by 52 because there's 52 weeks in a year. Okay, multiplied by 52, and that is 173% return for the year at 3% a week. Okay, I'm only looking for 1%. 1% a week is over 50% per year, and that works for me. You guys have to figure out what makes sense to you and what is okay for you. How much time do you have to devote to it? How much money do you want to throw into it? What kind of realistic numbers do you want? And number one, does it make sense? All right, let's keep on going. What does the competition completion look like when it expires or it's purchased? You get your money back. That's basically it. Lone Wolf, dude, I haven't heard from you in a while. I wish I could sit down with someone that knows this. I need someone to show me once. Okay, see, Lone Wolf, I actually do have a morning trading group where you can watch over my shoulder as I trade 3 accounts. Now, I have 7, but I share 3 of them publicly. So you can go to my website right there, and see all the trades that I've done last year. Okay, I haven't put up the ones for this year yet, only because I'm trying to get caught up with the end of year stuff. And this is not my thing. This is just a hobby. But these are all the numbers that I did this year. Intel, Kohl's, Win. What did I make that week? That week I made 0.45? No, wait a minute. That's week 23. 0.6? Oh, that's terrible. 0.6. I don't make 1% every week. But for the most part, I do. All right, let's keep on going. Holy cow. Holy shit, we're past 11:30. Okay, no more stocks. Let's go over and answer questions because we got 99 questions. I wasn't paying attention. Sorry. P dot. Okay, I'm locked in. I have no idea what that means. But okay, Mikey G's in now. Lone Wolf, just pay attention. What yield do you shoot for? 1% a week. I just put money on stocks and they just sit there. Not sure when and what pays dividends. Lone Wolf, you should never invest in something you don't know or you don't understand. That's rule number 1. For me, anyway. It's different for everyone. Do I do Forex? No, I do not. Connor Holt, how are you today? Gurudine, how are you? Hi, can you please explain what dividends are? Oh, Gurudine, a dividend is a portion of the profits the company gives back to the investors. So when you put money into a company, okay, they take that money and they do business as usual and you get a portion of the profits. That's what a dividend is. Okay, Luis, we have to do Nike tomorrow. Donald Duck, good job. You're... Dude, you are sick. My mom's in her 80s. That's disturbing. Alrighty. Anyway, let's keep on keeping on. Filito, USAGX. No, that doesn't make any sense to me whatsoever. I do dividend stocks only. What is the platform you're using to read numbers? Okay. Métis goes out. This behind me? Whoops, not that. Not that. Get out of that. Get out of that. Get out of this. Go back to that. This behind me is called Think or Swim. It's free to download. I get nothing out of it if you guys download it and you use it. It is owned by Charles Schwab. You can use it for free, but you will eventually have to give them a call and say, hey, I would like to use this software. Is that okay with you? BTI, Michael, we looked at BTI already. You can only have to ask once. All right, that works. Noah, dividends are basically the company's earnings being paid to the owners. Basically, yes, it is. Dividends are leftover funds that the company pays to shareholders. Yep, that's correct too. He'll see your question. Patience, thank you, Chatterbox. It's Think or Swim, Charles Schwab, thank you. Thoughts on Blackstone Mortgage Trust. Okay, Randy, you have to hit me up with that tomorrow, only because it's past 11:30. I usually done at 11:30. I wasn't paying attention, and I still have 100 freaking questions to go over. All right, let's go the best I can. Matey goes, Think or Swim. Yep. SLY, we'll have to take a look at tomorrow. How do you lose money if you don't sell at a loss? Whew. Club Med Tom, thank you for that. How do I lose money if I don't sell at a loss? If the stock goes against me and the option premiums aren't enough to cover and roll forward, sometimes you just got to pay. You dance to the music, eventually you're going to pay the fiddler. So far this year, we're in week number 7. Okay? It's 13 weeks and a quarter, 52 weeks in the year. We are officially quarter 1, week 7. I have 0 losses so far this year. Okay? We will progress this year. I'm going to see how long I can go without any losses at all. That's my goal. 1% a week. How long can I go with 0 losses? I'm going to have a loss eventually this year, but I have none so far. Johnny, so I have 401k. What do I put my funds in a tax-free fund? Your best bet, Johnny, I can't give you advice on that. My advice on the situation would be you need to talk to a tax strategist or a tax planner. Not an accountant, not a bookkeeper, not a tax preparer, a tax strategist. Target Fund. Oh, VTSAX and chill. No, no, sorry. Okay, Michael, where you look at BTI, it was a no. All right. Can you give advice on University of New Hampshire? No, I cannot. Is it a paid Discord, Junior? Yes, it is. I'm not trying to sell anyone, so DAFA, Microsoft, you have to check me tomorrow. Microsoft is a great company. They consistently increase their dividends. Anui, what's a covered call question? Okay. A covered call is when you buy something. You own it. You have the right to do whatever you want with it. Covered call is where you sell a call stock option against a position you already own in order to collect some type of cash flow from that position. Okay, DAFA, Applied Materials, we'll look at it tomorrow. Michael, I asked you, please ask me a question once, only once. You've asked me like 6 or 7 times about BTI. I looked at BTI. It was a no. Not quite sure what other things you want me to say about it. Other than no, niet, nada. Jay Moore, thanks, James. My thoughts also, you're welcome. Thoughts on Capital One Finance? I love Capital One Finance. You have to hit me up tomorrow. USAGX, that does not sound like a dividend stock to me. Okay, University of New Hampshire, we already talked about that one. Hi, I'm Pearl. What about Dole? Ooh, Pearl, we'll have to take that one and look at that one tomorrow. Real Deal Yarborough. Scalper. Cool beans. Chasing Jack. There are hundreds of stocks out there. If the numbers don't work for that week, find another one. That simple, yeah. Progressive, bro, thanks. Tesla. Okay, user 23, whatever. Tesla does not have any dividends, so that's going to be a no automatically. Oh boy. All right, right there. Okay, Wall Street Cowboy, ExxonMobil, love it, XOM. Vanguard Rapid Repairs. Hey, what platform is that you are using on the screen? That is Think or Swim. Mark Gala, I'll say Mark Gala, yeah, no. Starbucks EX date is the 14th. Taking my money out after that date. I'd taken the money out before that, dude, because stocks go down after the EX date. Okay, Just and XN, JEPQ, you weren't paying attention. We did JEPQ earlier. ExxonMobil, we'll have to look at it tomorrow. IQVIA Holdings, we'll have to take a look at it tomorrow. What about meme coins? They have no dividends. Sorry, dude. PayX, tomorrow. Mara, tomorrow. 20 years of consistency, absolutely right. No meme coins here. Thank you, Jack. ETHU, never heard of it. What do I think about Coca-Cola? Love it. The numbers just don't work for me. Intel canceled their dividends. Yes, MJ, I know that. Just killed an option. Agter, okay. What is the strike price? Tesla getting 400 million government contracts. Well, alrighty then. Michael, it's 66 a share, I think. Alrighty. Why does it show you are down money on Intel? Well, okay, Michael, here's the thing. What it shows on Intel it depends on what you're looking at. Are you looking at year-to-date profit and loss? Well, because year-to-date profit and loss starts January 1st until today. However, I bought Intel last December. It doesn't take into account the amount of money or the amount of premiums I collected all in the month of December. Now, just because my stock price is down from what I bought it at doesn't mean I'm actually losing money. So let's go. All right, we're going to have to do that one tomorrow because it's past 11:30. I need to get the rest of these questions. And we'll take a look at that question if you want to ask me again tomorrow. Oh, wait a minute. No, let's just get it done and over with. All right? Hell with it. Okay, you think I'm down on Intel. Well, let's go back to Intel's right here. Intel right here. Okay. Profit and loss since open, 4,897. So you're right, I am down on it. However, okay, profit and loss year to date, I'm up 2,800. So which one is right? Which one is wrong? Profit and loss year to date, well, it's right for this year. But I bought Intel last December. So I brought it in from last year. So from when I bought it last year until now, yeah, I'm down 4,000. But for the year, I'm up 2,800. So it all depends on what you're looking at. I still own it. I have no intention whatsoever to selling it. And I get 1 to 2% every single week from it. Now, even though the stock is down from when I bought it for, I have no intention on selling it at a loss. So is it a loss? It's not a loss until I take it. And I have no intention whatsoever on selling anything at a loss this year. All right, so let's keep on going. All right. Flaka, do you have to own a stock to do a covered call, not holding on margin? You can do it on margin if you want, but you do have to have a stock in order to sell something against it to have it be considered as a covered call. Flaka, just wanted to come and say this. Turned 500 to 11,000 1 month trading gold, currency, blah, 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 blah. Well, Flaka, good for you. It's not what I do here, but okay. Jack, DKNG, DraftKings, no. Sorry, dude. Airplane Spotter, hey, I invested in VOO and I'm only 24. Well, I feel bad for you. The reason why I say I feel bad for you, okay, Airplane Spotter, hold on a second. Now, the reason why I say I feel bad for you, VOO. Hey, Melody, how are you? Okay, so Vanguard ETF, okay, VOO. It has dividends all the way back until 2010. 15 years. Doesn't quite make it. Okay? But hold on. Let's check out the numbers for VOO. 56, 53, that's backwards. 54, 57, 58, 69. That looks good. 57 backwards. 64, 69, 94, 67 backwards. 74, 79, 91, 78 backwards. 81, 88, 98, 90 backwards. 95, 109, 101 backwards. 95 backwards. 88 backwards. 130, 1 backwards. Do you see what I'm saying? VOO. It goes up. It goes down. It goes up. It goes down. It does not have consistency of profitability. And it's only 15 years old. Okay, but wait, it does get worse. Believe it or not, you're thinking to yourself, well, it's not consistently profitable. How could it get worse? Well, here we are. You ready? We'll look at the summary. Here we go. The yield. Do you have any idea what the yield is? Okay, right now the stock is going for $550.90. You take all the dividends, you add them all together, and then you divide it by the purchase price, $555, and that gives you your rate of return or your yield. And the yield for VOO is 1.2%. 1.2%. That's horrible. That's for the year. That's not a week, not a month, not a quarter. That's for the year. Okay, explain to me why you think 1.2% per year is a good idea. What else should I invest in? Thank you. Airplane Spotter, you're new here. I can't tell you what to invest in. What I can tell you is I only look at stocks that are consistently profitable. That means every single year they make more money year after year after year. And the dividends get higher and higher and higher. So I'm here every night from 9 p.m. until 11:30 showing everybody how to get a simple, safe, predictable, consistent 1% per week. And I know 1% per week for somebody your age doesn't sound good at all, but it comes to over 50% per year. At 1% a week, you can double your money every 13 to 14 months. You can't do that anywhere else. What's up, my brother, long time? Johnny Harris, how are you today? Joe, too. We'll have to look at that one tomorrow. SNP, I have no idea what that one is. Oh, Snapple. Ooh, interesting. Okay, Jack, how's Nike on dividends? I'll have to look at it tomorrow. Quinn, PNC. Verizon, Pfizer, MGA. I have no idea what MGA. Comcast, yes. Pfizer, yes. Visa, yes. PNC, MGA. I don't really familiar with that one. Okay, Airplane Spotter. What software am I using? I'm using Thinkorswim. What should I do if I'm down at 100,000 on AMD shares? Should I just hold? Okay, first and foremost, I would never have done AMD shares. Okay, for me, no dividends, no thank you. No consistency and profitability, no thank you. AMD I would never have done. So telling you what to do with AMD, I honestly could not tell you because there's a lot of missing information in that little tiny 2-sentence little question you have there. S&P 500 thoughts? No. That's my no. Teach me I'm new. Pola. Yeah, I'm here every night. No complaining, just a thought. Okay, thanks, Jack. Why the 20-year rule? Okay, Sebastian, it's a personal rule for me. Okay, I'm 61 years old. I'm retired. Okay, I've been working since 1973. That's a long time. Okay, I have X amount of dollars. That's it. There's 9,875 companies you can invest in at any moment in time. So my question to you would be, what is your investing criteria? You know what mine is. 20 years of profitability and weekly options. That's it. Just 2 rules for me. Just 2. 20 years of increased profitability and weekly options. That's it. That's mine. You figure out what's right for you. That works for me. Now, I've been doing this for a long time, and that works for me. So I'm from a generation called the Gen Xers. A lot of people don't like us. The funny thing is, we really honestly don't care what you think of us. I know, it's strange. So we have a saying, if it ain't broke, don't fix it. Or look at it this way, if it's working fine, leave it alone. So Sebastian, why the 20-year rule? Because it's working just fine. Okay? If it's working fine, leave it alone. It's that simple. Co-ed, what's happening? All right. Thank you for everything you do. Do not get told enough. Probably not. Chasing Jack 20 years. Kate, got that? What publications and resources would you recommend? Okay, I like the book by Wade Cook called The Wall Street Money Machine. It's a simple read, okay, and it's short too. Caldwell Cutie, how are you today? Tariffs are being used as a weapon here because they are not replacing taxes with tariff. It's based. Okay. Caldwell Cutie, please educate yourselves. Thank you. Sebastian, you already asked me that question about the 20% rule. Jim, Super Micron, we'll do that one tomorrow. What are covered calls? Oh my goodness. Jim, go over to YouTube and put in what's a covered call. Lots of videos there to explain to you exactly what it is. Lindarella, have a great night. We'll see you again. Now, we already looked at MU. I wasn't here, okay. And Inod, never heard of it. Godric, but that doesn't explain how to do a covered call. Now, Godric, this episode is recorded on YouTube. Now, I've done 3 or 4 covered call examples where we looked at the charts, we looked at the numbers, we actually did a couple of them right here, right in front of you. I actually did one. Actually, I did 3 or 4 of them. So it's there. All you have to do is just see it. That's an awful example considered a misdemeanor. Okay, Caldwell Cutie, thank you. His Chasing Jack, theft of service. Okay, I'm a little bit lost here, Caldwell Cutie. How about Generac stock? We'll have to look at that one tomorrow. That's per contract. That's correct. You forgot taxes. Okay, no, I didn't. I said if you're concerned about taxes, you really need to talk to a tax strategist or tax planner. What do I do with my 6 forward contracts on Friday sold at $9.50? This is my first time. Okay, Caldwell Cutie, I hope you're here tomorrow night because what I'm thinking, Ford is currently at $9.23. You do absolutely nothing with them, and they'll expire worthless, and then you own the stock, and you get to do it again next week. Or you can just roll it forward, one or the other. Holy cow, 28 more messages? That's not what a dividend is, not tied to profits. Okay. I sold out of AT&T, got 700 profit, but it's still flying. Okay. Could you share which companies have good paying dividends? Ugh, nope, too many of them. Think or Swim, blah, 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 blah. Okay, Sinbad wants to take a look at Kohl's. We're going to have to do that tomorrow. Pederek. What do I think about AJG? I think they're a solid company. We'll have to ask about tomorrow. AUR tomorrow. Caldwell Cutie, you're not explaining it. You're old people who don't understand the lingo, dude. Use generic terms. I'll see what I can do. Money Mike Ford. We'll see what we can do. Uh-oh. I seem to be done. Uh-oh. No. Forward we looked at. How about and? All right. Good morning, my friends. What is what you have about Pepe? All right. That's going to have to be tomorrow. What's wrong? You lose every day it's down. No, Godric, I don't. What do I think of Tesla? I don't do Tesla because it doesn't have dividends. No profits, no dividends, no thank you. My mental has not been okay. All right, what do I think about Rolls Royce? Yeah, no. What about Dell? Love Dell. We'll take a look at tomorrow. Long-term DraftKings, yes or no? Or Ruben, I don't do anything long-term. Longest I've ever held anything is 9 months. Ruben, Spider, no, we already looked at that one. What do I think about Tesla? No, no dividends, no thank you. Jervison, Spider, yeah, no. Write a covered call on AMD monthly is like 5% per month. Okay, you have fun with that one. What screener are you using? I'm not using a screener. It's Dividend Kings, Dividend Aristocrats, Dividend Champions. Godric, how do you do that? What do you think about Tesla? That's like 5 people asked me about Tesla. No dividends, no thank you. Okay, Caldwell Cutie, AMD rug pulls every day. Okay. Are you investing in energy stocks too? Yeah. Any cash secured puts? Yeah. What do you think about Tesla right now? Nope. Thank you for what you do. You're welcome. Dream pulling. Interesting name. I'll try real hard. All right, creator. Short Palantir. I don't do Palantir. No dividends. No thank you. I will try to be here tomorrow. Alrighty. Hood. It's not 20 years old. That much I do know. Ruben. Macy's. No dividends. Not 20 years old. Okay. Macy's is over 100 years old. Okay. Oh, it's pre-recorded. No, it's not pre-recorded. Ruben, is your strategy work for someone in their 50s? Ruben, I'm 61. So I'm going to think, yeah. GRO, Jervasin. Let's take a look at that tomorrow. That is it. That is every single question. All right. Okay, can you explain an iron butterfly trade strategy? Nicole, I could, but guess what? I'm not going to. The reason why I'm not going to is I have to draw the line somewhere. Okay, I'm here every night for about 3 hours giving you all this free content. The strategy I'm sharing with you is the one I created for my 9-year-old daughter. Simple, safe, predictable, consistent, no way for her to lose. Average 1% a week, that's over 50% per year. If 50% per year is not enough for you, I cannot help you out. Okay? So, that being said, you guys have a nice night, and we'll see you again tomorrow. All right? Have a good night, everyone.